All right. Hello, everybody. Welcome to the official Palantir Q4 2024 earnings live stream. We're going to be breaking down and doing a bit of a preview for the next 30 minutes on what we expect going into Palantir's Q4 earnings. And after that, we will get the numbers probably at 4 o'clock, 4:05. After that, we'll be analyzing the numbers for the next 40 to 50 minutes, and then we will have a call at 5 p.m. Eastern Standard Time to go deeper into listening to Karp, Shyam Sankar, and the rest of the C-suite at Palantir give us the results for Q4 2024. Now, before we get started, I do this. It's kind of becoming a tradition every time before earnings. I just want to say, regardless of what happens to the stock, this has been an incredible journey. I think everyone would agree that this has been one of the most amazing journeys over the past couple of years. It's been about 3 years for me now, over 2,000 videos, 200 episodes of Palantir Weekly Podcast, and lots of interaction with people across the world on this one subject that brought all of us together, which is Palantir. And it's been one of the largest blessings of my life. And I am very, very humbled to be in this position to be able to cover this company. And today is going to be another day in Palantir's trajectory to see if they can become one of the largest companies in the world. We already know they're one of the most important companies in the world, but obviously given what the stock did in 2024, was one of the best performing S&P 500 stocks, was up more than 400%. Now there's a lot of storylines going into Palantir, and we'll talk about it today. But regardless of what happens to the stock, I think it has been a community effort. It has been one of the most exciting efforts that we've all engaged in over the past 4 years, no matter when you joined the community. And we're here once again to celebrate earnings for Palantir. Let's get into it. I got a lot of people to help me figure this out because I have not done this on my own. It has truly been a community effort over the past 5 years. We got Vince, we got Amir, we got Matt Money, and we got Mr. Dom. What's up, guys?
Big Dom.
How you doing? I feel like you're like tempering our expectations, you know, when you made the opening, like regardless of what happens to the stock, I feel like we're going to get like a 20% drop or something.
Well, we got to talk about it. We got to talk about what happens to the stock, and we'll get into all that today. But before we get into it, anyone can go for this. Raw feelings, nervous, anxious. What are you guys feeling?
Never nervous when investing.
Okay.
Amir has balls of steel.
My conviction has not changed. My conviction has not changed since we started this. So I have a whole bunch of powder ready to go in case of something that would cause me to add even more past my normal DCA. And also, you'll be happy to know, Amit, Palantir became my #1 position with the NVIDIA drop. And
Hold on, Dom.
Wow, we got the soundboard now these days.
There you go.
Yeah.
Wow.
Where's the cowbell?
We're moving up in this world.
Moving up. No, that's incredible. Matt, your sort of gut feelings going into this earnings. Are you relaxed, chill, nervous? What are you feeling?
Well, it is what it is, you know. You can't really predict these things one way or another. So just kind of waiting for the numbers to drop. And even if they come in as you expect or slightly below or slightly above, you really don't know what's going to happen with the stock and what the sentiment is going to be. And I think the big piece is whether or not we hit year-over-year growth numbers that we might be expecting for fiscal year 24. It's going to be a lot of emphasis on the guidance that they're giving for 2025. And I think that's really going to be where the pivot comes in, if there is one.
I'm a little bit nervous or like I don't know if nervous is the right word, but I'm anticipating a drop after earnings because I have a hard time to get to the valuation we are in my valuation models. It doesn't mean I'm long-term not bullish on Palantir, but I do think that we did run a little bit too much too fast. And knowing what I know about the company, I don't really see how we scale to 40-50% revenue growth, which I think is needed to keep the price moving up or staying where it is today. And I hope I'm wrong.
Yeah, so let's get into it. First of all, I think it's okay for people to be nervous. If you're a nervous shareholder right now, obviously, first of all, you've got hard-earned money in the stock, and if the stock falls, you could see your net worth decline. So I think that's very important to keep in mind that we are real people investing real money into the company. But number two, the stock is up 10x, more than 10x from the very lows in 2022. And last year was the best performing S&P 500 stock, and it got into the S&P 500 near the end of the year. So when you talk about an incredible run and an incredible valuation that the market has decided to price in for Palantir, obviously there's a little bit of nervousness going in to a print where, as Vince said, can the numbers begin to justify some of the valuation we have? Or if the numbers aren't even that good, doesn't matter, given some of the qualitative aspects that the street cares about. So let me begin the coverage with these 5 questions and a clip from Karp from last earnings. And then I want to get everyone's take on some of the storylines that we've got going on. So what are the storylines? Number 1, is the SARS expense priced in or not? And how bad is the hit? How bad is the hit? For those that don't know about the SARS expense, that is a $120 million expense that Palantir is likely going to incur because the stock was above $70 for a certain amount of time and employees got to sell their SARS options, which is an expense that Palantir ultimately has to take. Number 2, does Palantir need to guide upwards of 35% year-over-year growth in 2025 for the street to be happy given the multiple it's trading at? Or can they be at 30% and below? And would the street be okay with that? Number 3, if top line growth isn't as strong, are free cash flow growth, operating income margins, which have been phenomenal for Palantir, rule of 40, etc., enough to allow the street to feel Palantir will continue to grow into its potential, even if top line revenue is not as 40, 50%, as Vince was saying. Number 4, if DeepSeek proved that LLMs are commodities and an LLM company like OpenAI is about to raise at $340 billion, what does that mean for a company like Palantir that's profitable and now growing in the public markets? And then finally, what does the government growth look like now with Doge, which has been a major storyline for the past couple of months? And can Palantir guide for some type of catalyst because of the government's willingness to spend more on software? This is a 2-minute clip from Karp in the Q3 earnings that I think sums up his philosophy on what he thinks about growth, margins, etc. So I'm going to play this clip and then get everyone's reaction to these storylines going into Q4.
An average normal way of looking at Palantir would be like, oh, great, you have a 44% growth on a $2 billion base in the US, and you have a rule of 68, get that 68 down to 50, and maybe you can grow. But in fact, that way of looking at a business misunderstands the way in which Palantir builds. We believe that by investing, and we know at this point, instead of trying to have 10,000 clients, all of whom hate you, it's kind of what people want, 10,000 clients that hate you, but they can't get your product. We want a smaller number of the world's best partners that, quite frankly, are dominating with our product. And the way you do that is by not blowing up your margin and getting 10,000 salespeople. It's actually by going deeper on the product. And in fact, what we see is the deeper and better the product, the more we drive sales, the more we have our cultural singular advantage as Palantir, not as a commodity product. It's like, we are not a commodity. We do not want our customers to be commodities. We want them to be individual titans that are dominating their industry or the battlefield. And we reflect that in how we do things. We are not trying to be your average Harvard Business School preferred company with like that reduces the margins, has a thin product, and then has a lower rule of 40 and presumably higher growth. By the way, I don't think you get higher growth than what we have. Honestly, although we of course are always pushing and want even higher growth, the people who tend to ask these questions tend to be modeling companies with 20% growth and lower margins. We have 44% growth in the most important market in the world, arguably not the only, but by far the most valuable market in the world, while having a rule of 68, i.e. the best in the world. And we're going to maintain the contradiction of having both high margins and high growth. It's not one or the other. They're actually interplayed, and they're not a contradiction. They power each other. That's how you know you have a world-class product.
I think we'll get more of the same from Karp today. Dom, let's start with you. What is the biggest storyline you're thinking of going into earnings?
I mean, I think it's SARS. I mean, I just don't know what the market's going to respond to that. We didn't see a lot of people place that into their valuations. I thought maybe we'd see some people change their valuations last minute. So depending on how bad that miss is or how they augment or spin that, I think will determine where we go, whether up or down. So that's kind of my big concern. And then at the same time, to Amir's point, maybe they mitigate it if they have some crazy guidance for the positive.
Amir, what is the biggest storyline you're looking at going into this call?
Well, just to comment, I'm really curious about the SARS as well, because I kind of changed my stance from initially believing that it would be a catalyst for a lot of selling. And I believe that, well, some analysts have come down. Raymond James is one. Mariana came out with $90 price target today. I haven't read the report, but I wouldn't be surprised if she also lowered her estimates. I kind of believe it's kind of easy to for management to talk that away. It's a one-time expense. It was in the prior filings. I mean, it's all out there. So any selling due to that specifically, it's kind of, it would be stupid, but a lot of stupid things happen in the market, so we never know. The current estimates that I can find are 3 cents, which is down from 5. So it has been lowered a bit, but I still believe 3 cents will be too hard to hit. I have them at like 2, and I'm kind of optimistic. So we'll see about the SARS. The biggest thing for me, honestly, is just seeing pricing power with AIP, how that's scaling, and that should show in net dollar retention. And also I'm expecting a lot of total contract value, because that shows confidence into future growth. I think most investors at this point in Palantir is trading so expensive, overvalued according to many. But if we can see some kind of evidence that the future growth is really there, for example, total contract value, we know that Q4 was crazy with a lot of contract activity. I think that might suit the markets. Soothe, is that how you pronounce it? I don't know. But yeah, that's the main thing for me, just seeing those scaling levers at work.
Okay, Matt Money, we talked a lot on Palantir Weekly on Friday on your expectations for growth projections. What do you think is the biggest storyline going into this earnings?
I think it's this continued dominance in what they're doing, right? I think AIP has been a huge differentiator for them for the past 18 months, and I'm hoping they continue to build on that momentum. Whether or not you believe it based off this earnings call or not, this will eventually be $1 trillion business. And regardless of what my short-term sort of mentality is on the stock price and potential stretch in the valuation, I've held that. Initially when the direct public offering happened, 200 billion was kind of my initial thought, and ever since I've been able to see these guys execute and where their heads are at, that changed to 500, and it only has increased to $1 trillion based off of what I've been able to see. And I'm very confident in that perspective. What am I looking for specifically for this one? I am kind of curious around the SARS as well. Do you take it all up front? Can it be split up into multiple quarters over time? How does that actually work? It's very curious to me. While they might be awarded, they might have some sort of time component to them still. I don't know how that part of it works, right? So very curious to see how that kind of works. But both, I'd say the continuation of AIP and the SARS component I'm kind of curious about. But I will say it's pretty interesting that you can take such a large impact of $150 or so million potentially from SARS, or 100 to 150 million, depending on what it is, and still be net income positive. And they just guided it, right? They said it specifically in the 3Q earnings call that all the quarters will be, and especially next quarter, will be GAAP income net positive. So we can at least know that even at that point, when they were above $60 a share at that point, likely, or close to it, that they still believe that they're going to be GAAP positive. So I don't really see that SARS number showing up as too much where you end up having a negative income print.
We have some quick CNBC coverage on the recent upgrade. Let's go to that, and then we'll be back.
17 minutes till the closing bell.
After a brief sell-off to start the year, optimism seems to be growing around future orders. Analysts at Wedbush Securities citing what they call unprecedented demand, while BofA raised its price target on the stock to $90 from $75, telling clients that the recent DeepSeek news highlights the AI software names like Palantir that cannot be commoditized. That's their view. One question on the street: does Palantir CEO Alex Karp plan to increase spending on scooping up some of the smaller competitors? A report indicates a potential investment in Shield AI. That's a drone startup that counts the U.S. and Ukrainian government as customers. Currently across the street, 3 buys, 14 holds, and 6 sells on the stock in the options market right now, indicating about a 10% move in either direction after earnings hit. Mike.
Yeah, it's a divisive stock, loved by retail. The street's a little bit wary of that valuation. See how it breaks after the close. Thank you.
And obviously, yes, it is loved by retail, but we have seen institutional holdings go up by, I think 20%, went from 30 to 55 over the past 6 months. So, Dom, how are you thinking of institutional exposure to the stock, and do you think they are ready to buy more of this even at these levels?
I think they do if this drops, for sure. The more and more what we've observed with the CNBCs of the world and legacy media is they like to provide fear mongering and valuation and looking at things in spreadsheets. And if there's something that the retail community has picked up on, starting with Tesla to Palantir and others, is if you can identify the long-term growth trajectory and what the company can be fully capable of and its optionality in the long term, who cares what the valuation is now? I'm holding this thing for 10 years. Most institutions don't do that. But I think that as you're seeing more and more see the long-term growth trajectories, I think we could see it even go more once it dips.
I think that's a fair point. Amir, what are you thinking about when it comes to the numbers institutions are looking for on this print?
Honestly, from a logical standpoint, I don't think there's anything that Palantir can report that would be satisfactory to Wall Street, like if they were to actually base it on just numbers alone. I think at this point, it's all about momentum and belief into the future, which most of us have. As for the institutional holdings, I'm kind of curious if someone has. You can probably do the math if you look at the weightings inside the indices. If you just subtract the indices, has actual institutions gone up? I'm not too sure. Maybe, probably. I mean, it's gotten a lot of attention, so probably. But I think most of that is indices, which is fine. We welcome it. It's been a core driver of this run, which is of course welcome. But I mean, just looking from numbers perspective, their estimates are super low. So Palantir will likely beat on revenue. On net income, it might be hard on EPS because the SARS, of course, which we didn't even mention this, but there's no guarantee that SARS will hit. I mean, we made the case that it's likely, but we don't actually know. It's Palantir. Anything can happen. But yeah, like they will probably beat, but that doesn't mean that is satisfactory from a valuation standpoint. So I'm not really sure what they're looking for. I mean, it's kind of like 50-50, like coin toss. Like you never know with this stock.
Vince, your thoughts? Also, Vince, we have people saying they are way too distracted by your glasses, so you might have to take those off. You're muted right here. Yeah, what are your thoughts on institutional exposure for the stock?
Yeah, I mean, I think CNBC, I think they made a mistake there because in my recollection, it was retail first, and then the institutions fell in love with the stock, and they made it seem like institutions were early, and now like retail is driving the stock up, because I have a hard time imagining that retail had the money to take it from 40 to 60 to 80, because it needed many billions of dollars. And to my knowledge, I don't have this, and if some of the viewers have it here, then hey, what's up? I have a link in the description box below, you can visit. But so yeah, and I'm not really worried about the institutions. It's and in the long term, I think that this earnings is not so significant because Palantir is very well on track as it is. What I'm worried about more is that they're going to report a fantastic quarter, and let's say they have 29% growth, and like the same margin as last quarter, which by any account would be a fantastic quarter, but somehow the street is expecting 40 or 45% growth, and then it will be sold to, yeah, like we will have like a minus 15% day. Like that's what I'm worried about.
Is one of your other larger fears, Vince, that this valuation, or let me ask a better question. What do you think is driving, and I would love the chat to participate as well here. What do you think is driving the valuation? Because I think everyone can objectively agree at a 70 times price of sales, Palantir is one of the most expensive names in software. Nonetheless, a lot of people continue to hold the name because they believe in the long-term vision. What do you think is driving the uptick in valuation?
I mean, my honest theory on it is that one, there is a very loyal shareholder base that is holding it for the long term. And honestly, there's like, yes, the price is very high, but there's no reason to sell the stock. Like there's literally not even a dark cloud even coming on the horizon. So, and then, the buyers want to get in, and when there's no sellers, then the price has to go up.
That's fair. Dom, same question to you. What do you think is driving the valuation here?
Put it in the chat. It's the business model, the rule of 40, and the split actual business model of government and commercial. Government is believed to be more sustainable, so kind of a safety net for them. However, I think with Doge and all the reformation that we're going to see in the next 4 years, it could be a catalyst and continue to outgrow commercial, especially with the size of those contracts. So I think just overall, the rule of 40 plus they got 4 billion plus in cash, zero debt. It's a clean company from that perspective.
Let me put this question in the chat, and then I want to move over to you, Amir. What do you guys feel? So 2 numbers from everybody. 2 numbers. You can put them both together, separate them by a comma. What do you think the growth rate is going to be for Q4? And then what do you think the guidance is going to be for 2025 growth? What do you think the growth rate is going to be for Q4? What do you think the guidance is going to be? I'll start off first. I think they're going to grow 30% in Q4. I think they're going to guide for 32% in 2025. Amir, what would your take on that be?
31 for reported quarter and 30 for the guidance.
Matt, any thoughts on guidance and growth rates?
For the fourth quarter and fiscal year 25?
Yeah.
For fourth quarter, I think I have 27%, but based on the conversation we had with Arnie and them, makes me feel like they're going to end up coming in at like 31, 32 because they've been under forecasting. But I'll stick with my 27% because that's what I've written down and posted on multiple articles at this point. The fiscal year next year, I think they're going to end up at 20. I forget what I said, but I think it was less than 30%. I'm thinking they're going to end up at like 27 to 28%. So hopefully they end up closer to 4 billion, but in terms of revenue, but I think it'll be hard pressed. They'll probably end up at closer to 3.75.
Dom, how do you think they're going to guide for 2025?
So I think Q4 will be 29%. And I think you're saying guide for the whole year?
Yeah. Yep.
I would say 30.
So all of us are kind of aligned. We're all in the 30s range. And I think that's because all of us realize that if it goes into the low 20s or mid 20s, it's hard to be able to say.
You left me out.
Oh, sorry, Vince, you as well. I didn't see you because the glasses. I wasn't able to see.
I took them off long ago, but maybe they got burnt into your eye or something. No, I also think 30% growth and 30% growth next year. And it's very interesting because like everyone seems to be in this range. Like if you look in the comments, it's very interesting.
Well, why do you think that is? I think there's a definite reason for that, but I want to hear you guys. Why do you think that we all are in the same boat and in the same range?
Well, I can give my reasoning, and just historically, they've been very timid with their guide, and also Wall Street doesn't expect a lot. So if you were to beat expectations on guidance, you don't really need to overreach at all or overextend. I mean, just 30 is still above what the street expects. It's above what the street is estimating for the next year. It's safe. You can always raise the guidance as the quarters go on, which gives you another positive momentum, catalyst. So there's no reason to go for something higher, even though I personally believe that we might see a 40% year. Personally, but I think the guide will be low because it's just what management has been doing historically, and makes sense to me too as well. As long as the street is so misinformed and so wrong with their estimates, then why overreach?
Yeah, I agree. I think everyone's looking for that 30% range. I also think I think they can get to 40% growth, but I think they would not guide for that because they would want to underpromise, overdeliver. I see some people in the chat asking about SARS. The quickest way to understand it for those that are here for the first time and have not caught this headline is that Palantir had a agreement inside of their filings that if the stock was above $70 for a certain period of time, employees, based on how long they've been at the company, would be able to get the difference between 70 and 50, which was their strike price essentially on these SARs. So it was $20. And if you had 1,000 of these, 1,000 of these SARs, you would have $20,000, right? Of essentially kind of free money for being an employee. It's the perks of taking a lower salary instead of working at Google. They didn't expect this would happen until 2029 in Palantir's filings. It happened in 2024. As a result, there is about $120 million expense that we don't exactly know if that's going to be $120 million. Maybe it's $70 million, maybe it's $80 million, maybe it's $50 million that Palantir has to incur legally. And that is going to be a hit on that top line earnings per share number. I think the street's estimating 3 cents, right? Amir, you said 5 or 6 cents, and we might come in at 1 cent, which obviously would be a 90%, 95% EPS miss. That could send the algos taking the stock down. If that happens, I think there's an opportunity there, but obviously that still could lead to some volatility. So we're going to have to see in the next at this point, 4 minutes, how this ends up playing out.
Do you think also, and I think Amir hit a lot of good points on the slow, like kind of not slow growth, but the consistent growth, is that their business model, they're going to do things their way. I think maybe they learned from the overpromise and underdeliver piece when they had the 5 years grow 30%. So kind of, all right, we learned how we play the Wall Street game, but moving forward, they know if that, you know, he understands his business model. You saw in that interview, like I think the most impressive thing we've seen in the last year and a half is how much Sham and Alex understand the business precedents of their business and the margins and everything else. Someone put in their 50% free cash flow margin for next year. I totally agree with that. So they can take advantage of just slowly growing, and then they probably have a good idea when that NVIDIA breakout is going to be.
Yeah, and I agree with you with the under promise, over deliver stuff, because they did say 30% growth a couple years ago and they weren't able to live up to that. Obviously, 2022 happened, the whole market crashed, but it's better to be a little bit more conservative here than not.
But you know what would be so crazy? Because even after they dropped the 30% guide, like compounded for 5 years until 2025, he removed that, and then he got pressed by CNBC in an interview. He said, well, what happened to that 30%? He said, he reiterated even after the fact, he said, I'm driving the company to do 4.5 billion in 2025. I actually believe that they have an opportunity to actually do 4.5 billion, and Karp would be right again. How many times has he been early? Said like, yeah, this is going to happen in a couple of years. Imagine he is right on that reiteration. I think that happened summer 2023, so a year and a half ago. So it's not that long, and they dropped the 30% after 2022 Q4. So I mean, it would be crazy, and I think it's possible that it actually drives them to 4.5, which is like NVIDIA moment, because that's like close to, I think that's like 50% growth. I think it can happen, actually. No, not ironically, I think it can.
Vince, go ahead.
Yeah, I just wanted to say that maybe I misunderstood Don's question, but do you mean like why 30% and not like 60, 70, 80%? And
yeah, I mean, no one's calling for a large growth. We're all in that same kind of safe zone.
Yeah, and my answer to that would be is because Palantir is I'm joking, but as a consultancy, no, okay, end of joke. But it's more like they have a way with their customers that they have to custom build the software to the customers, and then it needs to spread within the organization. And they are obviously not a consultancy, but I think that there is like a natural limit to how fast they can grow within organizations. And this is why
beautifully, like to that point, I didn't even think about that, but like, they are so customer obsessed on results. Yeah. They would rather focus on that than what revenue they get from that customer at that quarter.
Exactly. And I mean, you know,
I gotta cut you off just for a second to end out the close, and then we'll get back into our analysis. Here we go, folks. Palantir Q4 2024 earnings, 4 p.m. The stock market is now closed. Palantir closes at $83.92. We're probably gonna have a couple minutes until we get the results. Vince, go ahead. You can continue.
I kind of lost my trail of thought, but yeah. So
why do you expect them to do 30% and not 70% growth? Basically?
Yeah. So I think that there is like a natural gravity, or I don't know how you can say it, that they're not able to grow like 80 or 90 or 100% per year. Because of how they set up the company. And I want to stress that I don't think it's wrong. And I think that 30% or 27% compounded annual growth rate over many years is completely insane and is a mark of an insanely good company. So there's nothing wrong with that. I just think somehow the expectations of maybe Wall Street, not retail, but maybe Wall Street is like ahead of the company a little bit, or what they can deliver. But and I hope I'm wrong.
All right, so now we wait. We will all be verifying the stats on external sources to see. Obviously, we'll see what the stock does. It's right there, but we should be getting numbers probably in a couple minutes, maybe even in a couple seconds. And once we get the numbers, we'll see how the stock reacts going from there. Most of you guys voted for 30% growth on the guide. About 37% of the chat voted for 30% guide for 2025, which I think is reasonable. I think Palantir really wants to hit 30%. I think psychologically being at 30 versus 27, 28 is important. So we will see that guide pretty soon. All right,
Let's
now
not
we
get baited like last time by some fake news.
Yeah. I know you guys in the chat are going to try to say $1 billion in revenue. I got baited by it last time, and it was stupid on my part. But
Oh yeah, where is Arnie?
I don't know. Arnie's probably vacationing somewhere right now.
He's skiing somewhere.
Skiing somewhere. He's enjoying life.
Arnie said he might drop by.
Yeah, he might be able to make it. All right, now we wait. Now
Arnie is so confident in Palantir, he doesn't even show up to earnings. He's like,
well, I mean, when you invest in $7, if the stock really goes to 60 or 50, I mean, and I asked my chat the other day, a lot of people just said, look, we just buy the dip. I mean, most people are educated enough to know the valuation's extended. If it does take a massive hit, you get an opportunity to buy more shares. If not, you get to relax and see the stock go up. So it's actually, no one should be that nervous, to be honest. If you've been in this for a while, you sit back and you buy more if you like the dip. If not, then you just continue to hold. So I don't think it has to be that scary. It's a lot less scary than May of 2023 when the stock was $7 and we were looking for that catalyst. You know, I think a lot
and the growth rate was going down and not up. We
Correct.
went down to 14%.
Correct.
What kind of upside are you expecting on it if it's a blowout? I mean, we all like expect like 30-ish. But imagine it's like 35, 40, like out of nowhere. Like, what kind of reaction do you expect?
I think we could see 90. I think it can get there. We are seeing a little bit.
We might hit 90 before the call. I mean, look at this thing.
Something happened.
Well, earnings has been very pump fakey. I mean, some stocks have gone up and then down, so I don't think we can trust the initial moves. But once we get the numbers, we'll then see what happens. We are up about 1.2%, folks. Don't have the numbers yet. I am looking to see. They should be out in 2 minutes. 4:05, I think they should be out. Oh, we got it. Wait, no, we didn't. I almost fell for that. Shout out to RC posting the fake numbers. Almost fell for that. The street wants 11 cents of EPS and 775 million of revenue. 11 cents of EPS and 775 million.
11 cents adjusted, right?
Correct, adjusted, yeah.
How much would be the 700 million? Like what the street wants?
It would be about 26 to 27% growth if we do 775.
Oh wow!
And if we do 799, it would be about 30 to 31% growth.
Yeah, that's right. Yeah.
This is the fun part about investing, right? This is the anxiety part.
I'll say the thing that I like most about Palantir is that they do their earnings on YouTube, and that makes it so easy rather than like having to type into Q4 or something like that and stream it through that. And then obviously you get the video response as well, looking at the actual folks, right? So instead of like having just a normal conference call like it's the 90s, yeah, it's nice.
Yeah, they're one of the first to do that. But do you guys, okay, the question that always comes up in earnings.
We're green. We're green.
Oh, wow.
90. Oh my goodness. We are green. 90.3 up 8%. Again, we got to wait. We got to wait until we see this play out. But we have hit $90 for the first time ever. It could go away very quickly as well. But we are green up 8%. I am looking for the numbers. I am looking for them. If anyone has them on the panel, let me know. But we are indeed green. It's holding the green so far. I know it's only been like 30 seconds, but it is holding. Initial reaction is positive. Initial reaction is positive. I don't have the numbers yet. I'm checking multiple sources to see if I can get them. Don't have them yet, but we are green. 14 cents. Wow. 14 cents versus expectations of 11 cents. 36% growth.
Wow. Where's the release?
52% revenue growth of the United States, 31% guide. We got a 30% guide. We got a 30 freaking percent guide going into 2025. They came in with $828 million of revenue, beating expectations of 781 million. Folks, Palantir just put up some numbers to prove they are the real deal.
That is crazy. Wow.
Oh,
That
has
is insane.
anyone seen where that's listed? I can't find it anywhere.
No, I can't find it either. It's probably going to be posted in a second, but we do have sources that I trust that posted it. So those are accurate. We're waiting on the actual numbers. Oh, there we go. I got it. This is the tweet. I don't have the exact website yet on Palantir, but this is the tweet. Let me pull it up right here. Okay, here we go. Palantir reports Q4 2024 revenue growth of 36%. That's close to 40. U.S. revenue growth of 52% year over year. Issues fiscal year 2025 revenue guidance of 31% year over year growth. They are going to compound for their first year since 2021 at above 30%. U.S. commercial revenue grew 64% year over year and 20% quarter over quarter. U.S. government revenue grew 45% year over year and 7% quarter over quarter. That commercial revenue number in line with what they guided for and around that 60 to 70% range they've been hitting it for the past couple quarters. Adjusted operating margins are 45%. That number was 39%, if I'm not wrong, last quarter. So
their rule of 40 is 81%.
Rule of 40 just went to 81. That was at 68% last quarter. Adjusted operating margins went from 39 to 45. That's a 6% increase quarter over quarter. They generated $1.2 billion in free cash flow, with $517 million of that being at a 63% margin, which is incredible. Our GAAP EPS of 3 cents in Q4 2024 was in line with analyst estimates, and our adjusted EPS of 14 cents outperformed estimates by 27%. That's even with all the SARS stuff we've been talking about. For fiscal year 2025, we expect revenue of 3.7 to 3.75 billion. 206 to 254 million above current analyst estimates of 3.5 to 3.53 billion. I mean,
to be honest, I'm kind of speechless. Like, not even in my wildest dreams could I see that. Like, that's why I said the question. Like, what if they blow out? And you said 90, and well, we got 94 now. I
remember giving Amir crap because he was saying they think that they would come in at 30%, and that 30% would have been 10% quarter over quarter. That's 14% quarter over quarter.
It's Palantir, baby. Never know. We never know.
I'm still speechless.
Well, here's the thing. Here's the thing. A lot of people will say, even with this type of growth, it doesn't justify the valuation. The problem with that argument, you're going to hear a lot of these headlines tomorrow that even with this growth, it's not enough to live up to the 12% further multiple expansion we got just now. However, there's not many other software companies able to compound and reaccelerate, and the street is caring about the future, not the past. And that's what we're seeing right now with Palantir. That is why we are getting this premium.
I want to release. Come on, Palantir.
Well, I guess the new buy zone, the safe buy zone, is $80.
I mean, there you go.
$80.
There is simply no company like Palantir. Sarah, thank you for the gifted 20. Appreciate that. Dragos, thank you as well for the 50 gifted. For every Palantir shareholder, congratulations. Regardless of what happens to the stock after hours or tomorrow, this is a company that just put up numbers that is proving they are not effing around. Now, if you give me guys about 7 minutes, I'm going to get through Karp's letter that just came out. I'm going to read this word for word, and then we will get back into all the numbers.
Guys, imagine a year ago where Palantir was trading. If I told you in 1 year from now, Palantir is going to trade at 100, which is like a possibility, like it might hit that after hours. Like, you would have called me crazy, stupid, every other name if I told you, like, yeah, Palantir is going to trade at 100 in a year's time. It's wild.
Well, there we go. We are up 12% after hours right now, and Palantir, quite frankly, put up numbers that, regardless of what happens to the stock, I mean, I don't think any of us really, like, the stock is cool, but these numbers are just unbelievable. And I think we kind of know now why Karp's been talking with all this bravado, because he's got the numbers to back it up. So let's get into this letter. From Alex Karp, CEO of Palantir. We are still in the earliest stages, but the beginning of the first act of a revolution that will play out over years and decades. Our total revenue in the fourth quarter last year reached a record $828 million, representing a growth rate of 14% from the prior quarter's total of $726 million and 36% from the same period the year before. This is not an incremental advance or marginal acceleration of our business. This is a new phase. And the momentum we are seeing across sectors, both commercial and government, is unlike anything that has come before. The business we have built has now developed its own internal momentum and strength, its own interior life and forms of untamed organic growth, with the output that we are seeing far surpassing what we are investing. A software juggernaut has indeed emerged. We have the products and reach of an established incumbent and the speed and growth and agility of an insurgent startup. It is the most lethal of combinations that we have been seeking to build, and the future is now coming into sharp focus. The strength of our commercial business in the United States in particular continues to astound even our most ardent believers, aka all of us on this panel right here. Our US revenue grew 52% year over year to $558 million in the last 3 months of 2024. And our US business at $1.9 billion for the year now accounts for 66% of our total sales. 3 years ago, government was 60%, commercial was 40%. That has flipped over the past 3 years. In the United States, commercial revenue alone in the fourth quarter grew 64% year over year and 20% quarter over quarter to $214 million. Sales to our U.S. government partners, from intelligence services to healthcare work, grew 45% year over year to $343 million in the fourth quarter, pushing annual sales to $1.2 billion in their U.S. government business. We have been preparing for this moment diligently for more than 20 years. A certain indifference to the doubts and opinions of others, to the shiny and fashionable thing, was absolutely required. But our patience and what some would fairly describe as our disregard for the received wisdom has been rewarded. Our results, the admittedly vulgar metric by which a market, often unsure of what it wants to reward, attempts to assess value in this world, have now surpassed even our most ambitious expectations. We still remember the quizzical looks of potential early investors when we attempted to explain that we were building enterprise software at a time when the floodgates of Silicon Valley had opened to fund consumer trinkets, online shopping websites, and other quite forgettable experiments in sating the needs of the latest capitalist mind. The looks were only more puzzled, the brows only more furrowed, when we made clear that we were intent on building software systems for U.S. defense and intelligence agencies. There were some challenging years. We were an odd bird flying in the wrong direction at the height of the consumer internet bubble. The embrace came only slowly at first, and then more recently, quite quickly. The unfortunate thing, either in business or politics, is that many of one's adversaries and antagonists will never respond to anything but strength, that crude form of power that does not ask for, but which requires compliance and deference. And so strength we have built. And still, the enemy of progress when attempting to advance the interests of either an institution or a nation is descent into complacency and abandonment of all humility. That sense of arrival, a certainty that history has ended, or condensation to an adversary or competitor betested, often only temporarily can be fatal. And it is the technical complacency of a society that often mirrors its political choices and instincts. Our commitment to tolerance and openness, our values as a culture, is without question infectious and compelling, but we cannot yet hope that they alone will protect us and win the day. A fuller statement of this argument and its implications for the current moment and the crossroads at which we have arrived is presently in The Technological Republic, which will be released shortly. This is Alex Karp's new book. As Samuel Huntington has written, the rise of the West was not made possible but by the superiority of its ideas or values or religion, but rather by its superiority in applying organized violence. He continued, Westerners often forget this. Non-Westerners never do. Sincerely, CEO of Palantir, Alexander Karp. Well, stocks at 96. Vince, give me your raw reactions. What are you feeling?
So wrong about this company. Like, it's so. Am I unmuted?
Yeah, you're good. You're good.
So completely speechless. I've been so wrong about this company. Like, imagine that you like, we were the crazy bulls, right? Like, people were like, this is a meme stock, and these guys are like fanatic, religious Palantir, and we were off by like a huge margin on how well the company was going to do. I've never seen this. This is super special, and I'm very speechless on how well they are doing.
Amir, your raw thoughts?
I've never been so frustrated that we don't have the actual numbers themselves. Like, I want the release, I want the presentation, I want to crunch these numbers. I want to see what they actually did in detail. I've never felt this frustrated or impatient to get numbers. It's crazy. I don't even know what to say at this point. Like,
speechless. This is incredible.
I feel like with numbers like that, you have to have some growth from Europe. You have to reverse that trend, because I just don't understand. Or the NDR has to be insane. Something. I'm with Amir. Something's got to be way different.
Come on, Palantir.
Let me get Dom's thoughts. Dom, your raw thoughts to this print. Dom, you're muted. You're muted. Oh, you're still muted. Okay, you know you're muted.
There we go. I know my computer was freezing. How did they get the EPS beat with the SARS? Like, I just don't get it. Mathematically, how did they get the beat?
It's the operating margins. That's the only way you beat it, is if you have better margins.
There is another way, because sometimes in the bookkeeping, if you have a one-time cost, it can be like, how do you call it? Like, it can be amortized over a period of time. And that can, like as Amit was saying, that they were expecting this in 2029, happened in 2024. If it's a one-time cost, it might be that they spread it out over a few years, but again, we don't know until we get the numbers.
I mean, it is expensed as SBC. We don't know how much of the SARS there are, but the easy answer is that they just had a higher revenue base. So even at the same margin as last quarter, but we believe that they like had increased margins. We don't know yet. We don't have the numbers, but likely just a higher revenue base than we could have ever predicted. Like, I could never see above 800 million, and I was at like I was at 2 cents. They came in at 3, which is in line with expectation, and I was at 780. So
I have the numbers. Amir, I just sent you in the chat if you want to start looking at it. I'm about to start going through all these numbers. One thing I want to say before we get into this, first of all, thank you 10,000 people for being part of this stream, 12,000 overall across our channels. First of all, congrats, everyone. You deserve it. I know a lot of you people that were watching all of us, reading our articles, watching our videos when the stock was $7, $8, $9. This is what happens when you believe in a vision and you have a revolutionary CEO like Alex Karp with a technology company that actually cares about their clients, not just cares about monetizing. We're seeing that happen in real time, and the growth is living up to the expectations, and the street is heavily rewarding something that is very hard to do. So congratulations to everyone. Congratulations for holding, and congrats for being part of the community.
Presentation's out.
Presentation's out. All right, so let me pull up the numbers, and then we'll get into the actual presentation here right now. So U.S. revenue growth, 52% year over year, 12% quarter over quarter to $558 million. Commercial revenue, 64% to $214 million. U.S. government revenue, 45% and 7% quarter over quarter to $343 million. Revenue grew 36% year over year and 14% quarter over quarter to $828 million. Wow, 129 deals of at least 1 million, 58 of 5 billion, 32 deals of at least 10 million. Closed a record-setting $803 million of U.S. commercial total contract value, up 134% year over year and 170% quarter over quarter. Are you kidding me? You're not kidding me, because I'm reading it right now. U.S. commercial remaining deal value is at $1.79 billion. That's up 99% year over year, 47% quarter over quarter. Customer count growth has finally reaccelerated quarter over quarter. Thank goodness. We got 43% year over year, 13% quarter over quarter. That number was 7% quarter over quarter. Now it is at 13%, so almost doubling, which is incredible. Cash from operations, $460 million, 56% margin. Adjusted free cash flow, $517 million, 63% margin. GAAP net income of $79 million. They took a $165 million. It's about 120. So 165 if you exclude SARS. So what's 165 minus 79? They took a $86 million hit on SARS, 86 million. Which isn't that bad. So we thought it would be 120. It ended up being 86. So that also helps them not have the EPS miss. GAAP income from operations of 11 million. That was a 1% margin. And then 142 million of income from operations when excluding the one-time SAR related expense, which is a 17% margin. Rule of 40 score of 81%. Adjusted incomes of 373 million. That's a 45% margin. They now have 5.2 billion on the balance sheet with no debt, which is another reason that this stock continues to get a premium from the street, as their balance sheet is very heavily loaded in case they need to utilize it. U.S. revenue for the fiscal year 2024 grew 38% year over year to 1.9 billion. Revenue 29%, just a smidge under 30%, but they still got to that 29%, 2.87 billion. Cash from operations 1.15 billion, 40% margin. Adjusted free cash flow above 1 billion, 1.25. That's a 44% margin. GAAP net income of 462 million. That's the most amount of profit Palantir has ever made in the history of being a company, representing a 16% margin. For Q1 2025, they expect $862 million in revenue, adjusted income of operations of $354 to $358 million. For fiscal year 2025, they expect $3.7 to $3.75 billion. U.S. commercial revenue in excess of $1.07 billion. That's a 54% growth rate. Adjusted income from operations of $1.5 to $1.67 billion. Adjusted free cash flow of $1.5 to $1.7. I think they're sandbagging. I think that's going to be $2 billion of free cash flow by the end of 2025. And they expect to be profitable every single quarter for 2025 as well. All right, there you go. Look who came to join us on a very special occasion. Hold on, who is this guy who's been talking about this thing for the past 5 years? What's up, man?
Yo, this is a pretty amazing quarter, man.
What is it? Give me your raw feelings. What are your thoughts?
My raw feeling is there's no way we don't get to like 40-50% growth this year. Like it's going to be freaking huge. And all signs I'm seeing are pointing to that. You know, it's not just this quarter, it's what I'm seeing picking up in the market, talking to customers, talking to potential customers. Like this thing's going to be a juggernaut, dude.
I mean, Code, I don't. Were you expecting this type of growth for Q? I mean, this is just
no. From what I was thinking, I was like, I thought they would probably miss on EPS even. Like I didn't think they would have that kind of an EPS beat. That's incredible. This is a really well-run company, dude.
Said it best, right there. Really, very much said it all there. That sums up earnings.
Yeah, it's incredible. So, like, my outlook for the future this year, I just, how are we not going to accelerate that growth and just go ballistic? You know, given that every company, and like, there's probably things they're going to announce later this week that may blow the roof off things. You know, so like, I think that people just have no idea how much traction they're getting in the market. And it's when you see the success stories at these companies, you're just like, wow, like technology could actually drive GDP up. If we're able to like use this across every company, we're able to like rework the way every company works with Foundry and Palantir, US GDP is going to get better. I guess that's how transformational this is going to be. So like, and I wouldn't say that unless I believed it, you know, and trust me, I believe it. Like seeing what we're able to accomplish with this stuff. There's a lot of hurdles along the way. Like how do we get more experts in Foundry? How do we get those people staffed inside companies? How do we like scale this thing on a level that where it's like Foundry isn't software, Foundry is the software that runs the company? Like we got a long way to go there, but I think that's where we're going to end up, you know, based on what I'm seeing.
So first of all, everyone's socials are in the description. I did not know Codestrap was going to be here. I just want to give him a quick shout out. If you are on X, please make sure to follow Codestrap. He's got a lot of announcements coming this year that if you're interested in Palantir, you will care about. And he's been a Palantir OG, been in this community for the past 5 years. And it's pretty exciting to see it come full circle.
Lots of open source software coming. We got ComsForge releasing Q2. And we're hoping to help be a catalyst to drive that developer adoption and like get the developer community bootstrap with some really impressive stuff you just can't build on any other platform. Like our vision with ComsForge is like, we're going to give you an agentic framework built natively for Foundry that does things that you didn't even think were actually possible with today's software. So stay on the lookout for those things. Q2 will be when we drop our first one. We're just going to keep releasing open source ones throughout the year. But I do think this catalyst around the developer community is going to drive a ton of growth. I really do.
Yeah, and I think the fact that you've been building this developer community over the past couple of years and getting developers to evangelize Palantir, I mean, it is so special. And
dude, full credit to Sham and team. Like that was Sham's vision, you know, getting this thing built. And he's had a lot of help. This guy, Andy, over at Palantir has been really instrumental in driving it. The team around it, Anurag and crew, like they're putting some really, really special stuff together for DevCon 2. So like it's all Sham and that team that are driving this. So full credit to them, man. Full credit.
Let's get the CNBC coverage and then we'll keep going from there, guys. The call should be starting in about 35 minutes.
So that was 3 cents estimates, revenue of $828 million. That was a big beat as well. The U.S. continues to be the growth driver amid AI adoption. U.S. revenue up 52% year over year to $558 million. U.S. commercial revenue grew 64% year over year to $214 million. U.S. government up 45% to $343 million. Palantir closed 129 deals of at least $1 million, 58 deals of at least $5 million, 32 deals of at least $10 million. Here's an eye-popping stat for you as well. Rule of 40 score, 81%. For Q1, revenue of $858 to $862 million. That was much higher than estimates for full year 2025. Revenue of $3.74
to $3.757 billion. That's also stronger. U.S. commercial in excess of $1.08 billion. That's what's expected. That represents a 54% growth rate this year. I spoke with co-founder and CEO Alex Karp. Here's what he told me, quote, "We're very long on America commercial, very long on this being a revolution, very focused on the present and future. See ourselves validated that ontology is what makes LLMs and AI valuable. And we're somewhat happy, they would say gleeful, that the experts are wrong yet again." All of this fueled by boot camps that they do, these AIP boot camps, also word of mouth. As Karp puts it, quote, "We do a lot of proclamations of truth, like the West is superior and we should undoubtedly kill terrorists. We do education, we don't do marketing." An example, Palantir implemented in minutes a process, according to Karp, for a company that had spent 5 years trying to do it themselves. I also asked Karp about tariffs and what changing policy for things like trade could mean for Palantir software. Karp saying, quote, "This is a revolutionary moment. We're embracing the revolution. There are going to be ups and downs. As long as it's good for the upward trajectory of America, we support it. And now I'm kind of glad that we're getting really serious on foreign policy. It's like, don't screw with America. We bring a lot of goodness to the world. Give us some respect." Karp on Doge and Elon Musk. Quote, "We help where we can. We want to help." Very supportive of what Elon is doing. I asked Karp about DeepSeek as well, saying, he said, quote, "Hopefully it wakes America up. Just because we're the first mover and we have the best tech scene and we're the inventors and we're the builders doesn't mean adversaries can't copy, and we have to just keep running." So if you take a look at shares of Palantir here, they are shooting higher, up 11%. On this beat on the top and bottom lines and strong guidance for 2025. So Adam, I'm going to go back to you. You can either answer the question I put in front of you, or if you want to react to Palantir here, given the fact that it really is on the forefront of AI and software application.
Yeah, you know, what's funny is I was in studio with you guys the last time Palantir reported earnings, and they were right around $50. Now we're doubling just in one quarter, nearing $100 a share. And I think, you know, DeepSeek really kind of emphasized that we're now in a new stage of AI.
And Karp obviously pressed this idea that the ontology is the new stage of AI. So I think the stock might about to be hitting 100. It's at 99.27. I know all of you guys are going through the numbers. Code, I just want to get your perspective on DeepSeek and its relationship to Palantir.
Sure.
Do you think that is the catalyst for what Karp's been speaking about when it comes to this ontology?
I mean, to me, it's the catalyst for what I've been saying and Sean have been saying for almost a year now, which is like the models are the commodity. You know, like there's going to be a lot of innovation in the side. Like I think open source is probably going to win. You know, when Sean came and spoke at the developer meetup we had, he showed a graph and it was like all these models basically converging on the same performance characteristics, right? And like he was telling the audience there, like, look, these things are all kind of converging here. What you really need is a platform that lets you leverage them in like a KLLM like pattern where like, you know, some of the patterns are certain models are better at certain tasks. So you use them for like one model for data extraction, another model might be better for safety layers, another model might do this thing better. You can do LLM based routing because like one of the biggest challenges I have and a lot of developers have right now with using these things is the scale. We get rate limited constantly. Like there just isn't enough infrastructure. If I want to run a use case across 75,000 people at an organization, we hit these rate limits really quickly. So you'll build fallbacks and we're like, well, if this model is not available, let's use this model. And if this one's not available, let's use this model. And Sean was explaining all these things like, look, that's what AIP is. It's this platform that's going to allow you to do all the hard work and engineering around these models to actually make them useful, right? Right. Never mind the ontology and everything that's giving you, et cetera, et cetera. So like, I think that it's validation that the areas we need to be focused on right now to actually extract enterprise value isn't some GPT-5, let's spend 100 billion. It's like, no, let's spend 5 million and figure out how your enterprise can use this technology effectively to drive growth, right? To take cost out of the business and to drive revenue up. And ultimately what that mission is improving GDP, right? Like it's about how do we make American industry work better, you know? And so I think that that's the message there. And I'm hoping that the investors and the people who are allocating capital right now, these like long-term infrastructure projects go, no, how about instead of worrying about better models, we worry about availability of these models, the cost of these models. We make these things economically viable. So like a person like me who's trying to drive adoption across 100,000 person enterprise to drive GDP can actually achieve that freaking mission rather than go spending another 100 billion on some useless freaking project named after a movie, you know, like that's the message. That's what that's telling us right now.
I would agree. And it seems like the street is waking up to that. We have not hit $100 yet, folks. We got Dan Ives on CNBC. Let's get his take on what's going on with Palantir, one of the only institutional analysts that has actually been following the story since the beginning. Let's get his take, and then we'll keep going from there.
Guidance for full year 2025 free cash flow better than expected as well. It's a stock that has divided analysts, even as it soared nearly 400% in the past 12 months. Only 3 analysts have buy ratings. We have one of them with us here today, Dan Ives, Wedbush Global Head of Technology Research. He has an outperform and a street high $90 price target. On the other side of this debate, though, is Brent Thill. He's tech sector lead at Jefferies. He has an underperform on Palantir and a $28 price target. It's good to have.
Okay, so we got one analyst at 90, another analyst at 28. This is going to be very interesting to see how they converge and what arguments they go for in regards to this earnings.
Have you both here. And Brent, I'm actually going to start with you, because in the shareholder letter that Alex Karp puts out every quarter, he basically called this a new phase as AI adoption accelerates, and with it, sales growth, which is what we're seeing at Palantir. And I spoke to Karp, and he said it to me like this. He said, quote, say you're a PE company, you acquire a large insurance company, and you wanted to change the cost of revenue, meaning how can you have fewer people doing the same amount of underwriting and have the same number of customers? That was a multi-year project, like 3 to 5. Now it's a 1-quarter cost that's completely different. And if you do it and the company down the street doesn't, you're going to have very different margins and very different revenue. And then he goes on from there. But we've talked about it for a while now, that 2025 could be the year where you see this application layer actually take effect, and you see corporate America begin to realize the benefits of the investments they've made on AI. Palantir seems to be very far ahead based on the earnings we just got. Does this change your thesis?
Look, they've had great fundamentals. I think this is a question of valuation. And again, you'd have to grow 5 years in a row at 50%, and stock would still trade at 15 times revenue. So it's not that we're arguing the fundamentals. Kudos to them, and great call by Dan on the stock. Our view is more about liking other names. And remember, 50% of this base is retail and insiders. There's no other software company like this. It's the lowest asked about question of any institutional investor, because barely any institutional investors own it. And so I go back to, we've all seen what happened to Snowflake at 50 times revenue. We've all seen what happened to Datadog and others. And maybe Palantir is different. Kudos to them. And I agree with you. It's getting to the application layer, and they're in a great spot. So I'm not sitting here attacking the fundamentals. The fundamentals are great. Ours is largely focused on the stock and looking at what's happened to investors in the last 20 years. When you chase things at 50 times revenue, it doesn't end well, and none of them have. So
okay.
I think part of it's we're just scarred from that, and maybe we're totally wrong on that. And so I acknowledge, we're wrong, but I also acknowledge, like, you got to look at the history and look at the fundamental analysis. So that's kind of what we're sticking to right now.
Dan, I want to get your response to that, because valuation has been raised by a number of folks here. One of the other things that came up in my conversation with Karp is the fact that, this is how he put it, he said, we don't have the right jokes, the right suits, the right steak dinners. We're never exactly the right people at the right time, unfortunately, and that's probably the biggest limit to our growth. Wrong people, wrong time, but right products.
Yep.
Sort of getting at this idea that they tend to be contrarian and that they don't have a marketing team, and yet they're growing. You've called it the Messi of AI, but the Messi of AI does look expensive based on some valuation metrics. Is it right for a pullback here, or does it keep going?
Look, I think this was a historical quarter. And ultimately, look, the bears, they were bearish at $10, hated 40, and despised it at 100, right? And I think they can see AI in the spreadsheets. When we do the checks that we've done for Palantir, I think it's the next Oracle, it's the next Salesforce. I think this is a company, when it comes to AI revolution, this is really front and center, is what's going to be one of the huge beneficiaries there.
Do they need to pull the marketing lever here? Do they need to build out that team, or it's not necessary?
I think the scary thing is, with no direct sales force and basically more inbound, this is what they've done. In terms of what these types of numbers, you start to look out the next 3, 4, 5 years. I think this is ultimately, this could be
$1 trillion market cap when we look out for the next 2, 3, 4 years. As Brett's talked about, I mean, institutional has obviously been very negative on it. But as we've talked, I think many have missed the biggest historical growth themes the last 20 years because they focus on valuation.
I'm going to try to get to both of you quick, but we got to be quick on the answers. Brent, is Palantir Tesla or NVIDIA here? Tesla, where fundamentals don't matter because the personality of the CEO is just so big, or NVIDIA, where it might look expensive now, but next year it's going to look cheap because of the fundamentals?
It's Tesla right now.
Okay.
No. I mean, look, again, you can't go back to any historic company that's ever sustained it. So again, if they can accelerate growth and keep it, then we're wrong. But it would be the only company in software that I've covered for 25 years that would maintain that.
Okay. Tesla's not bad though. Dan, is it Tesla or NVIDIA?
Look, I'd say it's Tesla with a little NVIDIA, and guess what? That's a cool club to be in. And when it comes to Tesla, I think this is Tesla in 2015, 2016, where I view Palantir.
Okay. Just as long as it's not Tesla in 2023 or 2024, a brief period of time, you know what? Maybe Alex Karp needs to buy Twitter.
And again, but again, you look at Karp, you look at Musk, visionaries.
Yeah, visionaries, big personalities too. All right, Dan.
How do we resolve this debate? Code, I want to give it to you first, then I want to get some other people. Valuation versus it's Tesla, yada, yada. What's your take?
There's no debate. I mean, Dan just nailed it. Dan Ives knows what's going on here. All these people are going to sit around and they're going to realize that they missed all of the best technology companies over the last 20 years because they were worried about the valuation, period. End of story. Like, we're going to re-platform industry in the US on Palantir and Foundry. Like, what is that worth? It's sure as hell worth a lot more than 15 times sales. I'll tell you that much. You know, so like these guys just don't get it. I think that unless you've like probably lived in the technology world and you see how fast these things can take off, and when you get an insight into it, you're like, this tech works and all this other tech doesn't work. You know, I'm like, the fact that we're going to actually use something that works to do things that have never been done before. Like this analyst, whoever he is, it's like complaining about the valuation. Like again, the losers are going to read his notes, you know, like that's what's going to end up happening here, in my opinion. Not investment advice, by the way. That's my opinion.
Dom, give me your take on this debate that we saw.
Yeah, I mean, it gets me fired up, dude. This is a clear example of when people don't understand technology and value delivered, and they're not close to the industry. They've not worked in it, so they have no clue about what the actual challenges are and what needs to be solved. And they take more of a sales approach. They take the CEO for their word on just a sales approach with PowerPoint slides, opposed to customers who are giving you examples of billions or millions of dollars of savings and what they're doing and who they work with. Like, this guy is nuts. $28? Are you kidding me? Like, I would love to roast this guy and have an interview with him on how he does not understand the ontology in this technology and what it's doing. Look at these results. Look at what Cleveland Clinic is doing with their software. Like, he said it already. This is unlike any other software company. Boom. That's it. You already said it, bro. So why do you have it at $28? You don't know what you're talking about.
Amir, give me your take on the debate that we saw.
I wasn't really paying attention. I was filling out the Excel sheet so I can present some nice chart for you guys. But I got Codestrap's comments, Dom's comments, and I guess they had on, who did they have on? I can already guess what he said.
Forget the debate. Give me my broader question here is valuation versus the technology potential we're seeing. I mean, how are you just thinking of that after this quarter?
They're related. I think it's a big misunderstanding that these are two separate things. If there is such a big technology advantage, then you can absolutely tell that narrative with numbers. So I completely disagree. My approach to investing is completely value-based. I haven't missed Tesla. I haven't missed Palantir. I haven't missed a lot of great companies. So I think it's just detached. Now, if we're talking price to sales and PE multiples, then yeah, you're going to miss Tesla and Palantir. That's not valuation. That's pricing. And then I completely agree with Dom and Codestrap. But for valuation, if you can tell a narrative that Palantir is going to be this massive, great business, then you can absolutely tell that narrative with numbers, and the valuation will make sense.
Vince, I want to get your take, but folks, it does look like we have a resolution to Canada as well. It looks like Trump and Trudeau just got off the phone. Yes, tariffs will be delayed for 30 days. Tariffs are delayed for 30 days, like it was delayed with Mexico this morning. So market's probably also getting a little bit of benefit from that. Vince, your take on valuation versus technology moat?
I need to do a very thorough self-audit because, as I said, like I never thought Palantir would be doing this good, you know, and I myself was like going into this earnings like, okay, the price has really gotten ahead of itself, and now I feel like it's kind of justified where the price was before the earnings, but now we're 20% up from that. So I feel like I need to really sit down and analyze what happens so I don't miss this the next time.
Matt, your thoughts on valuation versus overall moat?
Look, I understand that with a company like Palantir, you're going to have stretched valuations, right? But to me, it just continues to, well, I would say I wasn't expecting a print like this with respect to year-over-year revenue growth or quarter-over-quarter revenue growth. It way outperformed my expectations by a massive margin. I still think that there does need to be a slight pullback, regardless of whether or not you do see the generational type company that Palantir is. I'm not denying that whatsoever. But there's still some fundamental pieces with the company that I have issues with. And there's even better ifs, right? I mean, I just looked, we added 68 million shares just this quarter, just based on these SARs that just came through. That's a dilution of 2.5% to 3% just in the quarter, 7.5% year over year. That's something that needs to be addressed. And we have cash that's on, obviously at this point, starting to hit the balance sheet, 5.2 billion. That's 300 million more than I was forecasting for the end of this year. You know, we're just continuing to have idle cash added to the backlog of our balance sheet without any sort of real understanding as to how it's going to be deployed going further. Now, I'm not saying that we need to frivolously spend on buybacks or anything of the like, but you know, at this point, you're basically out competing your share-based compensation to hopefully make sure that the stock price goes up. To me, it's interesting. Granted, I understand if you're continuing to grow at a massive pace, you do need to reward your shareholders. You do need to reward your employees, but it just kind of is a little bit of a head scratcher. I do think that going into 2025, they do need to be thinking about the capital frame and how to put that capital to work.
So you're saying the head scratcher is that they didn't use their cash to balance out the SARS?
No, they don't even need to balance out the SARS, but with such amazing print they had, they only bought $18 million worth of shares, $64 million worth of shares the entirety of the year. And so not only that, you're buying that ATM at the market versus these SBCs that you're getting are much lower prices. So it's very interesting to me that they're not at least trying to do a little bit better, even with sorry, I'm a little bit sick, so apologies if I sound like a little bit of a child. But my hope is that they just do a little bit better of a job buying back a little bit more shares. But I am curious. Steven keeps calling me like a madman. I don't know if you want to give him a ring.
Has he called me? Yeah, he's. We'll get his take in a bit. And then we'll keep going from there. Vince, any thoughts on what Matt's saying right there about kind of buyback?
I feel like him and me are on the same team on this. Like I do feel like the valuation is a little bit stretched, but it doesn't mean that on the long term the company is not going to grow into it. And like, keep in mind, we were buying in the 8s, and I wouldn't be adding at these levels. But there's also, as I said before, there's absolutely no freaking reason to sell the stock.
Yeah, that's a good point. I mean, I'm sitting on a cost basis of $13, right? So to me, I'm like, well, shit. You know, we're at $97, $98. It seems like a lot to me. Maybe the people in the chat, I don't know. We probably have 15,000 people at this point. They're probably sitting there like, oh, my cost base is only $60. Matt, get off your high horse. You know, you asked, why do you want the stock to pull back? I get you. I agree with you. The long-term valuation of the company will be $1 trillion at some point. This is a generational type company that I don't think we've even fully recognized the future value. They're going to continue to come out with great products, not only just great products, but products that are custom for the industries and things that they need to accomplish. The problems specific, like software that's specific towards a problem. It's not an Excel fit it and make it fit for your purpose. That's not how this shit works. So interesting to see how this company grows into the future.
I would disagree though. Like on the, I don't know, we can have different perspectives on it. I'd rather see them use that cash to innovate and new products as well as scale their developer community, because that ultimately in the long run would get us all more returns and get us more money. I could care less. I'm not cashing out right now, so I don't care if they do that. But everyone has a different personal,
I would say like I know this for a fact. If they would take that money and put it into their partners so they could go train people at scale, like I'm talking like 10,000 people at some of these orgs that I know that could be brought up to speed on this platform, that would pay 10x, because what ends up happening is now when those people that are trained inside these partner firms and stuff, when new deals come in for their customers, they've got subject matter experts inside their organization that will recommend Foundry and AIP to be the platform to solve those problems. Whereas today they recommend competitors because they don't even know. Like, we're so early still, guys. Like, a lot of these people don't even know what Foundry is. They haven't even heard the name Palantir, right? Like, when they hear Palantir, they just think Peter Thiel, if they know anything, right? Or Alex Karp, right? They on the developer level, on the boots on the ground level, they don't even know about this platform yet. That's how early we are in the growth story. So, man, if you take, a few $100 million and you put it into these large big four firms and partners who exist with Palantir right now, you will see an astronomical growth curve out the other end.
Yeah, and that's why I'm saying capital frame, right? I mean, I don't want to see buybacks frivolously bought as well. But if you're not going to invest into the business, you could at least buy back stock. But if you don't want to buy back stock, invest into the business. Use that capital frame that you're getting, whether it's 10, 15, 20% of your ops cash on a quarterly basis to do something, to benefit either the shareholders or the company themselves, whether that's investing in stuff like Shield AI. I'm all for that, right? Especially taking really good, good bets. I wasn't against the 2021 SPAC opportunities. I just think they maybe could have been spanned out over the course of a couple of years rather than all at once. Those sorts of things I'm 100% for. I'm not looking to just be buyback centric and, take that $1 billion and everything. But if you're just going to continue to stack cash, give it back to the shareholders, because otherwise you're just getting a 4% yield. I'm with you, Code. I think that if you can find a way to put CapEx back into the business, I guarantee with the 82%, 83% gross margins that we just saw this quarter, you guarantee that you're going to be able to get way more than a 4% yield than what we're seeing on the treasury.
I'll give you guys a little anecdote. Like, I heard one time that at Palantir, they didn't hire anyone for almost a year because they couldn't get them through the interview process. Like, they have like a really stringent interview process. It's like really hard to get hired there.
Yeah. Yeah.
And they need that because they need the best people in the world to solve the world's hardest problems. Like that's a must kind of have. But there's a lot of problems out there in the world that aren't the world's hardest problems that their partners can be solving. And so I think this scaling through your partner network, it can allow you to be a force multiplier for the people in the world who aren't going to solve the world's hardest problems, but are going to go out and solve all the problems. And I think that that investment back into the partner networks and getting as many people certified and proficient in this platform as possible, as fast as possible, will allow us to share with the world what we already know, which is like we have the secret still that this platform, we're going to re-platform all American industry on it. This is going to happen. It's going to happen. We know it, but the rest of the world doesn't yet. And we can bridge that gap. And I think that's what we're going to do.
So first of all, let me do a couple of shout outs real quick. We got about 10 minutes until the call, folks, and then we'll keep going into everything we got. Number one, first of all, shout out to Chad and Iliano. Both of these guys have done just an incredible job engaging the retail community and getting Palantir to work with all of us that have been covering the company for the past couple of years, and with whether it's the merch or inviting us to AIPCon. I mean, they've just done an incredible job. I'm going to put their Twitters in the chat right here. Everyone who cares about Palantir should be following these two accounts. Number two, we've been talking a lot about the community. A lovely woman named Scarlett knitted me a Palantir hat and a Palantir scarf at a meetup I did in New York a couple of weeks ago. And she ended up sending the same thing to Dr. Karp, which Iliano was nice enough to present to Mr. Karp. And I just wanted to show everyone that Karp is wearing a knitted hat from a shareholder who bought this stock at $7, doubled down at 15, has not sold a single share. And I think this is another reason why the stock has this momentum in this type of community. It's because you've got Karp that actually does care about retail investors, and you've got people like Iliano and Chad that are bringing investors into the mix, educating us about what this company is. Someone like Codestrap who understands the tech, actually explaining what the hell the ontology is. All of that is just very, very special, and it's important to keep an eye on that continuing to be as special as it is into the future. Did we just hit $100? Let me make sure. Where is this stock right now? We are at 99.27. We hit 99.58. We did not hit 100. However, we do have someone joining the show that it would be nice to get their perspective.
I got to drop on it.
What's up?
Good seeing you, Code. Thank you.
Arnie.
I got to say hi to Arnie, though. What's up, Arnie? How you doing, man? I got to drop. I got to jump on another call right now, dude. But
Thank you, Codestrap. We'll talk to you later. Appreciate
Cheers.
you.
Bye,
Bye-bye.
guys.
Bye. Arnie, give me a raw take, man. Stocks up 20%, 36% growth, 31% guide. What are you thinking?
I'm just shocked. That's the true feeling. I mean, it's truly unbelievable that even for us, that we are bulls, we are convinced on the direction, we are convinced on the evolving story, yet the company keeps surprising on literally every side. We were discussing at the last Palantir Weekly how in reality the guidance was already positive, and I shared that even on the margin side, that 39% was, wait a second, but typically they tend to beat with a couple of percentage points, and bam, like completely demolished the gain at 46% compared with 39 guided. So I don't know what can I say apart from wow, and it seemed that the worry I had on the one-off expense, maybe it was already digested by the market, or it's just something so secondary for the main story that all the eyes are literally on the results. Because let me say that frankly, all the eyes need to be on these freaking results that they exceeded the rule of 40 at reaching 80-81%. That is completely unheard of for a company that is big and getting bigger. What typically happens is once the company reaches a certain scale, it is harder and harder to grow at a fast rate. Palantir is doing the opposite. The more it grows, effectively unlocking what we were thinking that would have happened. We are seeing the network effects taking place in the B2B SaaS market. So great job, Palantir. Great job, us. And congratulations.
Amir, go ahead.
Yeah, I was going to say, there's a lot of interesting stuff here. Did you guys, I heard the guys talk about expensing cash. Did you guys see how much cash they actually have?
Yeah, 5.2 billion.
5.2 billion, yeah.
Yeah, it's 5.3. Yeah, it's crazy. That's up from 4.5. But yeah, operating margins were only 1.3. So the only reason they made EPS and net income was through some other one-time expense that is just in other. So I don't know yet until we get the 10K, I guess. But yeah, I mean, there's a lot of interesting stuff here. I have a lot of charts if you guys want to. Or we're going into the call, so maybe
we'll save for the weekly because we got 5 minutes of the call.
Yeah, sure.
But definitely,
I didn't get to say a lot. I was just busy like putting in the numbers. But yeah, crazy quarter. A lot of strange like one-off expenses that we need some more commentary on. But I'm sure we'll get it.
Can I say I appreciate how they depicted the first slide. In Q4, we celebrated the successful delivery of our market vesting SARS. Like something that could have been perceived as negative, they turned it into something very positive. And frankly, I'm happy that they were able to achieve this success along also with investors.
I also want to shout out real quick. I can't post a link because it's a little bit too long, but Karp has a book coming out called The Technological Republic. I think if you're a Palantir shareholder, you would probably want to read that book. It is on Amazon right now for pre-order. It comes out in 2 weeks. I'm assuming Karp is going to go across the world speaking about this book. It's also amazing marketing for Palantir, because when you have a company that's as exciting as Palantir is and you have a written format to explain their ideologies, their philosophies, I think that's very important. So if anyone has not pre-ordered that book, The Technological Republic on Amazon or any other bookstore, you should be able to find it and get that pre-order coming in. We are at $99.85. We hit $99.91. We have 4 minutes until the call. Usually when Palantir gets this close, within 20 cents of a new dollar range, it ends up getting there. So I wouldn't be too surprised if we do hit 100. Palantir stock up 19.5% right now after hours.
This makes my Seeking Alpha article look really bad.
Well, there is one not very nice thing about the quarter. My chart kind of messed up now, but yeah, non-US commercial declined again, so that's not amazing.
Well, that's international, right?
Yeah. So US is doing amazing, fabulously, but international just can't get a break. I don't know what they're doing over in Europe, guys. Get your stuff together, Arnie. What are you doing?
But I guess that's interesting,
too, buddy.
The fact that we're able to kind of power through that, even though it stays flat or goes negative, and it's only going to get exacerbated, right? So now that the fact that the U.S. commercial is almost taking over 50%, if not more, then you obviously have the U.S. government side. It's almost like the international piece. While as much as I would love to see that continue to grow, it's going to matter less and less if U.S. commercial continues to succeed as it has.
Well, as a side note, consider that ServiceNow, so a company that is broadly comparable with Palantir as a leader in B2B tech and now trying to push the AI narrative, actually got hit by 10% because they missed on the guidance, and the guidance was missed mainly because they were weak on the international side. So this tells us that proportionally speaking, the US side of Palantir is so strong that is able to overcome whatever weakness on the other sides.
We got about 2 minutes until to the call. We are at 99.9. I know some of you guys might have seen 100 on international brokerages, but the one I'm looking at is at 99.95, 99.99. We are literally, there we go. $100 for Palantir, Monday, February 3rd, Q4 2024 earnings. Congratulations to everybody.
So on a fully diluted basis, that means we are now worth over $250 billion.
I think so. Correct. On a fully diluted basis, correct. 250 billion. Yep. We got 2 minutes until the call. Put one word in the chat to describe what you're feeling. We're going to end off with that question before we get into the call. One word in the chat for what you're feeling. Dom, I'll start with you. One word. How are you feeling?
Blessed.
Amen. A freaking men. I mean, absolutely. Arnie, one word to describe how you're feeling.
Rich.
I thought you said preach. He said rich, guys. He said rich. Okay. Amir, what are you feeling?
Looking up private islands on Google right now.
You know who's calling me right now? My sister's calling me because she was down yesterday on the tariffs war. Now she's probably excited. Watch this. Oh, I couldn't pick up. She's probably wondering why her portfolio is up 20 grand right now. And, it's because her big bro bought her some Palantir back when it was at $20. So there you go. But Matt, one word. How are you feeling?
Speechless.
Okay, there we go. My one word is community. None of this is possible without community. And this is one of the best communities ever. And it's a blessing to be on this journey. So here we go. We should be getting into the call very soon and officially starting Q4.
Let's go. Just a quick correction. International did increase. I just made a mistake. Okay. That's good.
I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our fourth quarter 2024 earnings call. We'll be discussing the results announced in our press release issued after the market closed and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our first quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
2024 was nothing short of incredible for Palantir. Our momentum accelerated through year-end, closing out 2024 with exceptional Q4 results, including an extraordinary top-line beat and outperformance led by our U.S. business. Revenue grew 14% sequentially and 36% year-over-year in Q4, and 29% year-over-year for the full year. The AI revolution continues, transforming industries and redefining how organizations operate. AI is a pivotal component in driving innovation and efficiency, something companies need to embrace or fall behind. With the proliferation of AI models, the raw AI labor supply is exploding. While everyone else is focused on the model supply side, we're transforming AI into a measurable stream of high-value finished goods and services. The result? The rapid emergence of quantified exceptionalism for organizations able to unlock the potential of these commoditized models through AIP. A byproduct of our incredible progress, our Rule of 40 score increased to 81 in the fourth quarter. It's a substantial leap to deploy LLMs into production with real impact. Most organizations are currently stuck on the wrong side of the widening chasm, working on their 2, 5, and 10-year plans, which become obsolete days later, failing to ever take action, but not Palantir or our quickly growing customer base. We've taken our position through our decades-long investment in developing the ontology, which allows organizations to seamlessly weave LLMs into their enterprise, unlocking their highest potential leverage. In this AI revolution, anyone looking for a solution that actually works is going to choose Palantir. Last quarter alone, we closed $1.8 billion of TCV across our business, which represents a 56% increase year over year. We closed a record-setting number of deals in Q4, including 32 deals worth $10 million or more. Our U.S. business is at the forefront of the AI revolution, growing 52% year over year in Q4. Last quarter, U.S. commercial revenue grew 64% year over year and 20% sequentially. AIP continues to fuel new customer acquisition, as we have nearly 5 times the number of U.S. commercial customers as we did 3 years ago, and significant expansion opportunities at existing customers. Organizations who have crossed the chasm with Palantir are driving real impact quickly. In this AI revolution, the biggest risk is not moving fast enough, and organizations are looking to us. With Palantir, as soon as work begins, we're delivering real, quantified exceptionalism for our customers. In my conversations, they're excitedly asking how we can replicate this success across their organizations. One of America's largest pharmacies has been a customer since early 2024 and signed a $67 million TCV engagement with us right after the pilot for workflows including automatically load balancing prescription fulfillment and orchestrating patient outreach. An American telecom company became a customer approximately 2 years ago and recently signed a $40 million TCV expansion deal to help manage and accelerate their decommissioning of old network technologies and equipment in order to achieve significant cost savings. Last earnings call, we mentioned the leading global insurance organization that deployed AIP to help automate underwriting workflows, reducing a 2-week process to 3 hours. That organization signed a nearly $11 million ACV expansion deal in Q4. Panasonic Energy North America is seeing the effects of its AIP expansion as they've created a maintenance assistant to help 350 technicians in making 5.5 million batteries per day, resulting in reduced machine downtime, greater throughput, and rapid onboarding of new technicians. In Q4, we also announced the customers in the inaugural Warp Speed cohort, which are using Palantir's Warp Speed to gain an advantage in aspects of their manufacturing operating system, including automated visual quality inspections and dynamic production scheduling. Anduril CIO Tom Bosco noted, quote, "By using the software, we've seen up to 200x efficiency gain in our ability to anticipate and respond to supply shortages." Our US government business, the foundation on which Palantir was built, is exceedingly strong, with revenue growing 45% year over year last quarter. We take pride in supporting the critical missions we're delivering against. Notable deals included the US Army extending its longstanding partnership with Palantir to deliver the Army Vantage capability in support of the Army Data Platform for up to 4 years. We also announced our recent contract expansion with US Special Operations Command, marking the first deployment of Mission Manager to US Special Operations Forces units. Our international commercial business continues to see pockets of growth alongside the large renewals of some of our longstanding customers. For example, Rio Tinto extended their partnership with Palantir for an additional 4 years, noting AIP is making their unstructured data accessible, allowing them to quickly attack problems previously deemed too complex. Using our software, network rail specialists coordinate 53 driverless trains, each with 240 wagons, ultimately improving throughput and safety. Our international government business also achieved strong growth. Revenue increased 26% sequentially last quarter, driven in large part by the UK, including our work with the NHS to roll out the Federated Data Platform as 87 acute NHS trusts and 28 integrated care boards have signed up to use it as of November 2024. We accelerated through the end of the year and we remain full throttle. We're at the dawn of this AI revolution, and in this winner-take-all AI economy, Palantir leads the way. I'll now turn it over to Sean.
Thanks, Ryan. For the last 2 years, we've been saying that even while the LLMs are improving, the models across both open and closed source are becoming more similar, and performance will converge, all while the cost per token for inference continues to drop substantially. And that's because the market's been focused on AI supply, the models. With the release of DeepSeek R1, that has gone from a contrarian position to consensus. It's now blindingly obvious to everyone. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on AI demand. From the beginning, AIP was built for this reality. Chat was always a dead end. Instead, we viewed LLMs as a new runtime for the AI labor. To capture the productive value of this AI labor, you need an intermediate representation of your enterprise that AI can actually interact with. How do you allocate inventory, onboard customers, process claims, call for prior authorization, and the like? That intermediary representation that makes all of that possible is ontology, and that's why it's been the secret to our meteoric rise. We are convinced the normative value for AI is enterprise autonomy, the self-driving company. Users go from performing the workflow to supervising an army of agents, teaching them how to handle edge cases and reducing dwell time. This is where we are maniacally focused with our customers. We've been working with a large multinational bank to automate core back office processes. What used to take 5 days now takes 3 minutes. Much more than the labor savings, this improvement eliminates historical constraints on the middle office and now enables the bank to create entirely new and differentiated financial products. We're working with a top engineering and construction firm to automate the identification of risks across tens of thousands of pages of technical documents, replacing months of arduous manual reviews with AI labor that can flag major risks to engineers in minutes. And we're working with a large power systems company to automate the understanding of technical diagrams to turn them into quotes into orders. And finally, we're working with an automotive supplier to analyze CAD files for component designs to have AI labor validate engineering standards and manufacturability checks. That is a 100-hour process for human engineers, now automated and serving up exceptions for human review. The before and after with AI is stark, and the speed of implementation is accelerating. You can divide companies up into 2 categories, the quick and the dead. Turning to Warp Speed, Palantir's modern American manufacturing operating system, it continues to move at Warp 10. Our nation is in the beginning of a great reindustrialization as we compete with China to secure a free world and individual liberties. This is a competition we cannot afford to lose. We announced our first cohort of Warp Speed customers, including Anduril and L3 Harris. The response has been exceptional, and the pipeline is swelling. Warp Speed integrates engineering, test, production, quality, and operations so that manufacturers can build better and build faster. Our FedStart offering hit a major milestone with the approval of our FedRAMP High environment for FedStart customers. This is radical acceleration, both in reduction of time and costs of market access for software companies in the federal space. Finally, in U.S. government, our deep investments in CJADC2 continue to deliver results. Maven continues to see significant adoption and is pathfinding new AI capabilities throughout the kill chain. Substantial new investments integrating contested logistics into Maven's AI-enabled kill chain met their moment in exercises in Q4. Adoption continues within the military departments, specifically Army, Air Force, and Space Force, as well as at the combatant commands with expansions at SpaceCom, Southcom, AFRICOM, and StratCom. While Hurricane Helene response galvanized the adoption of Maven on unclass beyond just the secret and top secret networks, the adoption has continued to grow as Maven is used for securing our nation's border and securing our nation's airspace by enabling drone domain awareness. And Maven is reaching our allies and partners via US supplied capabilities called Maven REL, all spurred by real-world events and the need to collaborate in real time in crisis. We are really just getting started with Maven and have an ambitious roadmap and a set of customer opportunities in front of us to deliver the unfair advantage our warfighters deserve. I'll turn it over to Dave to talk us through the numbers.
Thanks, Sean. We had an outstanding fourth quarter. Revenue growth accelerated to 36% year over year, exceeding the high end of our prior guidance by over 900 basis points and representing a 1,600 basis point increase compared to the growth rate in Q4 of last year. America continues to rapidly embrace the AI revolution, and we saw this unrelenting demand drive impressive outperformance in our U.S. business, which grew 52% year over year and 12% sequentially. Our U.S. commercial business grew 64% year over year and 20% sequentially, and our U.S. government business grew 45% year over year and 7% sequentially. On the back of this continued strength, we are guiding to a full year 2025 revenue midpoint of $3.749 billion, representing a 31% year over year growth rate. We delivered these outstanding top-line results while expanding adjusted operating margin to 45%, the strongest adjusted operating margin in the company's history. Our revenue and profitability drove a 13-point sequential increase to a Rule of 40 score from 68 in the third quarter to 81 in the fourth quarter. We also had an exceptional cash flow quarter with adjusted free cash flow of $517 million, representing a margin of 63%, and $1.25 billion in adjusted free cash flow for the full year, representing a margin of 44%. Turning to our global top-line results, fourth quarter revenue grew 36% year over year and 14% sequentially to $828 million. Full year revenue grew 29% year over year to $2.87 billion. Full year U.S. revenue grew 38% year over year to $1.9 billion. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 39% year over year and 14% sequentially, and full year revenue grew 32% year over year. Customer count grew 43% year over year and 13% sequentially to 711 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 18% year over year to $65 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 31% year over year and 17% sequentially to $372 million. Full year commercial revenue grew 29% year over year to $1.3 billion. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 37% year over year and 18% sequentially, and full year commercial revenue grew 36% year over year. We had our strongest quarter of commercial TCV booked at $995 million, representing 42% growth year over year and 63% growth sequentially. Our U.S. commercial business is seeing unprecedented demand, with AIP driving both new customer conversions and existing customer expansions in the U.S. Fourth quarter U.S. commercial revenue grew 64% year over year and 20% sequentially to $214 million. Full year U.S. commercial revenue grew 54% year over year to $702 million. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 76% year over year and 19% sequentially, and full year U.S. commercial revenue grew 69% year over year. We also had our strongest quarter of U.S. commercial TCV booked at $803 million, representing growth of 134% year over year and 170% sequentially. This exceeded our next highest quarter of U.S. commercial TCV booked by nearly $400 million, highlighting the increased demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 99% year over year and 47% sequentially. Our U.S. commercial customer count grew to 382 customers, reflecting growth of 73% year over year and 19% sequentially. Fourth quarter international commercial revenue grew 3% year over year and 15% sequentially to $158 million, partially driven by revenue catch-up from a customer in Asia. Full year international commercial revenue grew 9% year over year to $594 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating our growth in the U.S. commercial business. Revenue from strategic commercial contracts was $9.6 million for the quarter. We anticipate first quarter 2025 revenue from these contracts to decline to between $4 to $6 million compared to $24 million in the first quarter of 2024. We anticipate 2025 revenue from these contracts to be approximately 0.5% of full year revenue. Shifting to our government segment. Fourth quarter government revenue grew 40% year over year and 11% sequentially to $455 million. Full year government revenue grew 28% year over year to $1.57 billion. Fourth quarter U.S. government revenue grew 45% year over year and 7% sequentially to $343 million. Full year U.S. government revenue grew 30% year over year to $1.2 billion. This acceleration was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Fourth quarter international government revenue grew 28% year over year and 26% sequentially to $112 million, bolstered by our continued work in UK healthcare and defense. Full year international government revenue grew 23% year over year to $372 million. Fourth quarter TCV book was $1.79 billion, a 56% year over year and 63% sequentially. Net dollar retention was 120%, an increase of 200 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q4 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the fourth quarter with $5.43 billion in total remaining deal value, an increase of 40% year over year and 20% sequentially, and $1.73 billion in remaining performance obligations, an increase of 39% year over year and 10% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 83% for the quarter and the full year. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $373 million, representing adjusted operating margin of 45%. Full year adjusted income from operations was $1.13 billion, representing margin of 39%. Q4 adjusted expense was $455 million, up 1% sequentially and 14% year over year, and full year adjusted expense was $1.74 billion, up 9% year over year, primarily driven by our continued investment in AIP and technical talent. We expect to see a more significant increase in expense in 2025 as we invest in technical hires, the product pipeline, and continue our focus on AI production use cases, all while delivering our goals of sustained GAAP profitability. On the back of the strength of our results, we want to congratulate our employees for the successful delivery of their market vesting stock appreciation rights, or SARS. As a result of this achievement, we accelerated $131 million of one-time expense in the fourth quarter related to these equity awards. Fourth quarter stock-based compensation expense was $282 million, and employer-related equity tax expense was $80 million. Full year stock-based compensation expense was $692 million, and employer-related equity tax expense was was $126 million. Fourth quarter GAAP operating income was $11 million, representing a margin of 1%. Fourth quarter operating income, when excluding one-time SAR-related expenses, was $142 million, representing a 17% margin. Full year GAAP operating income was $310 million, representing an 11% margin. Full year operating income, when excluding one-time SAR-related expenses, was $442 million, representing a 15% margin. Fourth quarter GAAP net income was $79 million, representing a 10% margin. Fourth quarter net income, when excluding one-time SAR-related expenses, was $165 million, representing a 20% margin. Full year GAAP net income was $462 million, representing a 16% margin. Fourth quarter GAAP earnings per share was 3 cents, and earnings per share when excluding one-time SAR-related expenses was 7 cents. Full year GAAP earnings per share was 19 cents. Fourth quarter adjusted earnings per share was 14 cents. Full year adjusted earnings per share was 41 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 81% in the fourth quarter, a 13-point increase to our Rule of 40 score from the prior quarter. Turning to our cash flow. In the fourth quarter, we generated $460 million in cash from operations and $517 million in adjusted free cash flow, representing margins of 56% and 63% respectively. For the full year, we generated $1.15 billion in cash from operations and $1.25 billion in adjusted free cash flow, representing margins of 40% and 44% respectively. Through the end of the fourth quarter, we repurchased approximately 2.1 million shares as part of our share repurchase program. As of the end of the quarter, we have $936 million remaining of the original authorization. We ended the quarter with $5.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now, turning to our outlook. For Q1 2025, we expect revenue of between $858 and $862 million, and adjusted income from operations of between $354 and $358 million. For full year 2025, we expect revenue of between $3.741 and $3.757 billion, U.S. commercial revenue in excess of $1.079 billion, representing a growth rate of at least 54%, adjusted income from operations of between $1.551 and $1.567 billion, adjusted free cash flow of between $1.5 and $1.7 billion, and GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Welcome to our Palantir Revolution, otherwise known as our earnings call. There really is a lot of debate about with these numbers if you even should have an earnings call. There was also a lot of debate around which number is the best internally. We were undecided whether our 29% growth in aggregate, our 38% growth in the U.S., our 54% growth in U.S. commercial, our rule of 81. They may have to redo the rule because, you know, when you're doing twice the rule, of course, maybe the rule isn't fair to other companies. We may have to have a different rule, the rule of 70 or something. But we blew through that over twice the rule of 40. To say we did it our way is a minimization of what that meant. We have taken a long bet over decades around the assumption that if we built the products that our partners, most importantly our partners in the West, most importantly our partners in the U.S. ought to build, not what they wanted us to build, not what they mandated we should build, not what investors, venture capitalists or analysts were saying they would reward us for building, that company would generate so much value and that we would get a small percentage of that and we would end up as a massive, significant, and much more importantly, impactful company that could power the West to its obvious innate superiority, expose things that weren't working, rebuild the whole infrastructure of a company. We did that over with many platforms. Most successfully, however, was our interest in figuring out how to power human-driven analytics with the assumption that what ought to come would not be human-driven, i.e. would be AI at some point, and that AI potentially could be something like a large language model. And what we've delivered to the market is a symbiotic relationship between data, computer, LLMs, organized, powered, made possible, made valuable by something we dared to call an ontology, which was in the beginning viewed as a highly obnoxious, anticlimactic term that people thought we were using to obfuscate bad financials. And that ontology and our willingness to stick to our guns, again, because there's been billions and billions and billions of dollars invested in large language models, the idea that you could dare to build a product that was built on the assumption that the power of large language models would be in their the ability to operationalize them in the context of the enterprise in common language. So that was a revolution that we saw, that we built against, that we've led, that we've gotten off the ground. For us in America, we have 54% growth in U.S. comm. By the way, USG is now reaccelerated. It grew 30%. We are guiding above 30% at 31%. And we're doing this in a very, very complicated environment. You know, the part of the reason we've done so well is the experts look to the past as an indication of the future when we're looking to the future as an indication of the present. And it's very, very hard to figure out what's going to happen. We see, as much as I personally care about the broader West, including continental Europe, despite our best efforts and working at it every day, it's anemic. We're growing around 4% on 13% of our company. It does look like the continent of Europe will look to the past as a way of getting to the future, struggles with the idea that all the valuable technology in this area is built in America, perhaps struggles with the fact that to make LLMs work, you have to find a way to build something like an ontology. There's one available at Palantir. We have rejected all the way through anti-meritocratic concepts, anti-transparent concepts. We're at the forefront of civil liberties. One of the reasons ontology is so valuable is because the concepts that we built into PG, that we built into Foundry, that are expressed in branching, are concepts that both accelerate revenue, get and decelerate, control CapEx, i.e. make the margins something like what you would find at Palantir, but do it in a way that actually make the enterprise better, healthier, more ethical. We, at the end of the day at Palantir, are exporting our culture and way of doing things to enterprises, especially in America, by allowing enterprises to capture their tribal knowledge in a way that they can utilize LLMs, i.e. take the commodity side of LLMs and hypercharge their secrets of their enterprise using the secrets of our enterprise, namely, how do you build product? How do you end up with ontology? How do you implement it? And last not least, we believe we are making America more lethal, making our adversaries increasingly afraid of acting against the interests of America and especially Americans. And we're proud of our moral stance, and we are very long on the U.S. and what's happening and what will happen in the future. And with that, we should open up our earnings call. But this is obviously a very, very special time to be at Palantir. Palantirians and are very excited. And I am, it's by far the best time to be a Palantir. One of the things that's crazy important about our time Palantir now is it's actually the vibe internally, the vibe with our clients, the vibe inside of our products is we are at the way beginning of our trajectory. We are at the way beginning of a revolution, and we plan to be a cornerstone, if not the cornerstone company in driving this revolution in the U.S. over the next 3 to 5 years.
Thanks,
Thank you.
Alex. We'll now turn to a few questions from our shareholders before opening up the call. Our first question is from Christina, who asks, what is so unique about the ontology? How does it give you an edge over your competitors? And why wouldn't any of them be able to recreate something similar?
Well, thank you, Christina, for the question. I think we could start by thinking about if I was building software to solve problems for one company, well, you don't need an ontology. You just take the shortest path between A and B, and that doesn't involve ontology. You could think about, okay, what if I'm building enterprise software for many customers in a traditional way, not a forward deployed engineering way where I'm thinking about it deductively. I have large multi-year implementations, never mind that those things never work, but the traditional software industrial complex, you're not even going to conceive of ontology. But if you have the ambition to build software that works across government, across 50 different industries, you have to build ontology. It is absolutely the longest path between point A and point B, but it gives you superpowers when you show up to your customers. And it gives your customers superpowers when they're managing the change in their enterprise, mergers and acquisitions, fighting the entropy of the universe, competing in the market. But what makes ontology essential is AI. Ontology ends up being the intermediary representation that makes your enterprise accessible to AI in a way that's governed and secure and provides you the observability that you need so that you can actually trust the AI. But more importantly, the observability your regulators need so they can trust in your transition to being a self-driving company.
Yeah, and it also allows you to manage them so that the actual taxonomy and ability to put the large language model where it can be more exact, so it can be managed at scale. You could think of it as what we do on the Foundry backend, where we have it create pipelines. It's basically anti-segmenting the data. To get the AI to actually work in an enterprise, you have to resegment, reconcatenate the large language models in a way where the use case is thin enough that they can actually provide exact enough information, and the concatenation of that is exact enough to provide real results in an enterprise context, meaning you can rely on the large language model to do the same thing 500 people would be doing who are experts in dealing with text, and you can do that with 3 people. And then the question that Sham is answering is also, but why is it hard to build it? So now we know that Palantir is succeeding and has this, pick your stat rule of 81 growth with basically a nascent sales force. It's actually very hard to build, because in order to have an idea how to do this, you would have to have taken all the lessons of every single product we built, including security models, including how do you interact with the data of an actual enterprise, how do you impose branching, and then you'd have to interact with that and build something to work with the large language models, not as you thought they were, not as you'd liked them to be, but as they are. And that process probably will begin for lots of companies now. It is a very long and hard process to do this in a productized form. And one of the reasons people didn't figure this out is because tech companies don't actually need this, because they have one company or they have something, but it is not a product. Taking this from one company to a company that can install this anywhere requires a very specialized, dedicated product building culture with deep understanding the enterprise. Last not least, in order to be able to teach the large language model to get more exact, precise information, you would have to have a secure and cleaned access to the underlying data of the enterprise. No other company in the world has that kind of access like Palantir, and that's why we're completely uniquely positioned to do this. And luckily for the world, we're very long America, and we're doing it primarily here because it's powerful as fuck.
Thank you both. Our next question is from Kamal, who asks, how will the new Chinese AI model DeepSeek impact Palantir, and how can Palantir mitigate its impact?
Well, I think one of the obvious lessons of DeepSeek R1 is something that we've been saying for the last 2 years, which is that the models are commoditizing. Yes, they're getting better across both closed and open, but they're also getting more similar, and the price of inference is dropping like a rock. But I think the real lesson, the more profound one, is that we are at war with China. We are in an AI arms race. And I got into a disagreement with Sam Altman about this at the Senate AI Summit over a year ago, where I was arguing that we are in an AI arms race. And there's an opposing view that we can all get along and we can cooperate on these things. And I'm sure the other side feels quite different, realizing that their IP has been stolen in this process here. But this war started long ago. It was an economic war with the ascension of China to the World Trade Organization, the greatest IP theft in history, the greatest wealth transfer in history. It is an opium war. The #1 cause of deaths of 18 to 45-year-olds in this country is fentanyl. That is coming from China. It is a diplomatic war. The Belt and Road Initiative is basically indentured servitude for other countries to the CCP here. And the unprecedented phase 0 gray zone operations of the CCP, how many times are we going to believe that anchors are dragged across the sea that cut undersea cables here? But I think one of the things, China knows they're at war. The question is, we kind of equivocate on it as a peace-loving nation. But one of the things I want to make sure we all do realize is that the engineering in R1 is exquisite. The optimizations that they've done are really impressive. And I don't think you can get away with the facile explanation that the Chinese just copy and we're the only innovators. We have to wake up with the respect for our adversary and realize that we are competing. But they absolutely did steal a lot of that through distillation of the models, and perhaps they stole even more. And then you can look at the GPU sales growth in Singapore. It's a tiny island nation. I'm pretty sure there's some sanction invasion going on there. And we have to realize that the AI race is winner take all, and it's going to be a whole of nation effort that extends well beyond the DoD in order for us as a nation to win. And that M Day was yesterday. The time to mobilize has come.
Thank you, Shyam. Our next question is from Dan with Wedbush. Dan, please turn on your camera and then you'll receive a prompt to unmute your line.
Thank you. So, well, my question is,
By the way, Dan, we don't
talk about, are you surprised at all?
Can you repeat the question? We didn't hear you. Thank you.
Yeah, are you surprised at how quick these sales cycles are actually taking place from when a customer first meets Palantir to now deploying AI initiatives? I mean, does that surprise the team at all?
I would say I'm not surprised because of the energy we feel on the ground in talking to customers and the impact. You know, Shyam shared some examples, taking, you know, a back office process from the largest banks from 5 days to under 3 minutes, taking what used to, you know, automating a process for an automotive supplier from what used to take 100 hours to be automated with just a human check, and seeing the reactions of those customers when those are implemented, and seeing the impact, and seeing them wanting to move quickly, seeing them wanting to start quickly, expand quickly, and essentially stay ahead of their competitors. Like, feeling that energy and feeling that reaction on the ground, I'm not surprised, because you feel it. It's tangible.
What surprises me a lot is just, you know, customers and especially countries are just reacting completely differently. So in broad swaths, American companies have approached this revolution in a very pragmatic way, which is, you know, so we had all these, you know, experts saying that what you ought to do is buy a large language model and install it on your enterprise. And customers are like, great, we'll try that. But we're also going to try Palantir. And there's really no ideology in this, in aggregate in this country, defining how people do things. It's about output. How quick is that output? What is, and there are just, there's a lot of communication between enterprises in America, so especially in sectors. So people talk about what's working and what's not working. And if in distinction, if you look at Europe with 13% of our business and 4% growth rate last year. So compare that, it's like more than 10x better in America in US comm, right? And what's really happening there is people are reading literally basically PowerPoints of how you did tech installations in the 50s. And that's what they're doing. And what is jarring to me is that, you know, you just see adoption, radical adoption from some clients. Again, you do have some people in America who are still doing science projects, but it's, how could it be that one set of companies in one geography adopts, and in a very culturally similar geography, people are just like, yeah, okay, great, but that's not how we do it. And so it's, and this, by the way, is not just, you know, we talk a lot about US commercial because we can't really talk in detail about what's happening on the battlefield. But the battlefield, and, you know, Shyam could talk about this basically forever, that this is basically, we enjoy it. It's equally divergent. It's like you have cultures that are like, we have to fight in a way that suits our culture, that suits our ethics, where we have a primacy of winning and a primacy of maintaining our values. And those cultures are rebuilding how they fight, rebuilding the things that they think are valuable, looking at the evidence of what worked, what didn't, what was the cost structure. And meanwhile, there's just a lot of people who are just like, yeah, but that could get away in the way of vacation. And so it is really, really jarring. I think one of the things I am sympathetic with when investors look at Palantir is like, yeah, but it's very hard to know because people are going on different paths. But yeah, in America, in aggregate, the response is, I expected this to work in X amount of time. You got it to work and beat what I was expecting in 1/10, 1/20th, 1/50th of the time. And by the way, the other thing that is super surprising is, you know, 2-3 years ago, when we were doing Foundry or even some of our kind of more sensitive things in the military, I believe we were delivering results that were, you know, in 6 months would have taken 10 years, and they were things that people couldn't do. But now, because of the time and the power, you can't really hide it as easily in some department of your enterprise. So what would happen to us in the past is we would do a pilot, we do an enterprise thing, and because obviously people didn't appreciate my charm, and there were no steak dinners, and we weren't laughing at your jokes, and we were probably saying the wrong things at the wrong times, that thing got stuck in some part of the enterprise. Everyone knew it was the most important thing about the enterprise, but no one would acknowledge it. And now it's just too powerful. People are like, yeah, don't particularly like them. They don't go after dinners. They don't wear suits. Sham's hard to understand for me. But the results are massive. And that's what's driving the results in the U. That's what's driving the 54 number that we're guiding, that we did last year, and we're guiding to this year in U.S. commercial. That's what's driving the beat. That's what's driving our ability to really maintain our culture. By the way, it's also the rule of 81 really comes from this reaction to our company, but also because we can stick to our culture, our ontology of Palantir. We do not need 500 extra people a quarter. We can really power these things because the pull, when people actually see it, is enough to break down the institutional barriers, the political bullshit that often we were not able to break through in the past.
Thank you. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. So my first question is about disruption. Palantir has been actually thriving when there is disruption from the very beginnings of the company, 9/11, coronavirus, supply chains, LLMs. Now everyone is really concerned about DOGE with the change of administration. I could imagine a focus on efficiencies, a focus on software modernization, digitalization could actually be a really good opportunity for you. I don't know if you can deep dive on how is Palantir positioned to that. And my second question, probably to Dave, but I don't know, Shyam as well. When you see this demand, where do you invest to make sure that you're prepared to actually execute on it? Is it talent? Is it sales? Is it engineers? Is it partnerships? What do you do to make sure that you can actually capture this opportunity?
Thank you.
Well, on the first question here, I mean, I think no one really knows, but we sense a huge amount of fear amongst the traditional system integrators and providers here, the traditional providers to the monopsony. But we're pretty optimistic, and I think if you look at my comments over the past, even my recent Senate Armed Service testimony last week, Palantir's real competition is a lack of accountability in government. These forever software projects that cost an insane amount, that don't actually deliver results. They're sacred cows of the deep state. You can think about D6A. It cost billions of dollars and it didn't work. Soldiers in war zones preferred Palantir because it worked, and it happened to only cost millions of dollars. And I think DOGE is going to bring meritocracy and transparency to government. And that's exactly what our commercial business is. The commercial market is meritocratic and transparent. And you see the results that we have in that sort of environment. And that's the basis of our optimism around this. I think the work that we've done in government, it's deeply operational, it's deeply valuable, and we're pretty excited about exceptional engineers getting in there under the hood and being able to see that for a change.
We love disruption, and whatever's good for America will be good for Americans and very good for Palantir. And I think you got it exactly right. Disruption, in the end of the day, exposes things that aren't working. There'll be ups and downs. There's a revolution. Some people can get their heads cut off. It's like we're expecting to see really unexpected things and to win. Basically, that's what we're going to do. See unexpected things, report expected things, and win. And we're planning to do that, and we're pretty optimistic about the U.S. environment.
And on the investing front, it is quality engineering, right? It's quality engineers, and you can see it sort of how we set up our comp programs, and obviously that does mean headcount's going to grow somewhat, but really it is the quality engineers, more than the quantity, and you'll continue to see us, do that this year. We did it last year, particularly in the back half, and you're seeing it sort of in the numbers in Q1 and beyond.
Yeah, you also, by the way, for the first time, people want to partner with us. It used to be partnership meetings were complete waste of time and BS, largely so people could fill out a report that they met with us, kind of thing, like high school dating for nerds. I met with them, perfect. I'm not going out with them. That was our experience with partnerships. Now, in the last couple of weeks, I've had real partnership discussions because a lot of these people own verticals, have to deliver. They're under a lot of pressure, and people know how good our products are. And last not least, what we're really investing in my view, is where we have a truly unique culture. I visit with companies every week. I've been doing it for 20 years. I've never seen a company or a culture anything like ours. And that's what we have to fight to keep. And every single Palantirian is special. Everyone here is doing something unique. We need to continue to attract and retain people who are different, think differently, are different, and get them focused on the world's most important missions, building products the way we know how to build them. And that's our primary investment strategy. And it's not actually a question of money, which, means that that's how we crush the margins. It's about talent and, just building really great things, the things you ought to build, not the things you're supposed to build, and getting them to the front line.
Thank you all. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're doing it. We're doing it. And I'm sure you're enjoying this as much as I am. Let's not talk to analysts about the burden of being right, our burdens of investing in ontology, our burdens of actually looking at the math, the burden of reading what the rule of 40 is, the burden of being honest about what an enterprise software company is, or the burden of explaining to your friends that you're really happy. Maybe we should just stop talking about it. I'm very happy to have you along for the journey, and you are partners for us. Every Palantirian, we are crushing it. Everyone else who's listening, we are dedicating our company. We have dedicated our company to the service of the West and the United States of America, and we're super proud of the role we play, especially in places we can't talk about. And we love our success in the U.S. and globally. Also, we are doing in the United Kingdom and many other places. Palantir is here to disrupt and make the institutions we partner with the very best in the world, and when it's necessary, to scare enemies and on occasion kill them. And we hope you're in favor of that. We hope you're enjoying being a partner, and we're really happy and very, very focused on what we're doing. Thank you for your time.
Thank you. That concludes Q&A for today's call.
Drop the mic, baby.
I mean, this was, I think all of us are right now because we don't know what to say.
Guys, I'm convinced that Karp actually got teary-eyed during that tangent when he was answering Dan Ives towards the end. He actually started stutter up, get teary-eyed. I felt it in my heart. It was like a beautiful moment. Even towards the end when he was saying the goodbyes, I also felt like in his voice he started shaking. He got teary-eyed. I was hands down, this is not even close. This is the best quarterly, not only earnings numbers wise, but the best call. The way he entered in, should we even have a call? And I honestly, I was like, yeah, what?
We changed it to the rule of 70. They just made a new bar.
Everything was beautiful.
Yeah, there's a lot of numbers to get into and stuff. I don't think this is the time for it, to be honest. I think the time for it is probably Palantir Weekly because there's just so much to discuss. I think I'd rather spend the last 20 minutes of this kind of just discussing emotions, not only with everyone on the panel, but also in the chat. Obviously, right now, guys, the stock is at 103. I mean, this is life-changing money, like retirement type of money for people that took a chance on this company a couple years ago, even if you took a chance early 2024. And it's pretty incredible. I'll give my quick takeaway from the call, and then I want to go around the room. I think Karp crushed it. I think the big thing we got out of that call was a vision for the future, and a vision for the future in which Palantir does it their way and continues to do it their way. And I mean, I think that sums it up. Palantir did it their way. They never capitulated to get into the S&P 500. The S&P 500 realized that they need Palantir. They never capitulated to get this type of commercial growth through the steak dinners, PowerPoints. They're getting this growth because the product is so good. And they never capitulated to the analyst. The analyst now will probably send out a bunch of upgrades tomorrow because the analysts have to upgrade it because they've been so wrong on the story. So I think Palantir has consistently done it their way. They've built something authentic in a world in which authenticity is very hard to find. This is a company that embodies it. And as a result, the stock market is rewarding the people that took a chance on this company a long time ago and the insiders that work so damn hard to get this company to be where it is. Dom, your takeaway from earnings.
Yeah, just we're doing it. We're doing it. I mean, just so proud, man. As a shareholder, dude, there's just a feeling of patriotism too for what they stand for and protecting our rights, our country, our citizens. I'm a proud shareholder, and man, it's just getting started. Just blown away. And I just think it's that culture, it's that enthusiasm, it's that drive that you can just see, and how Sham and him were just spitting fire. And also they're fiscally responsible. They only hire the best of the best. So just thrilled.
Arnie, your take after that call.
Emotion as well can be I think my emotion as well can be summarized by this picture of Karp. Like, this is the picture of a man who fought for 20 years against everybody. Everybody shitted on him, but he was so convinced of his vision, and now finally people are accepting that.
Arnie, you are so right about this, dude. There is something uniquely American around the underdog story. That's why all the tech companies and all the big entrepreneurship stories exist in America. And to see someone who like went through hell for 20 years and then went through hell as soon as his stock went public because it went up 300%, then came down 80%. When he said we're doing it to retail investors, I think he felt very, very emotional because he knew a lot of us took a chance at $6-7, and here we are today.
Look, I remember I felt like that when we started seeing the first signs that Palantir was actually making that. Like the first gap earnings with like a plus 15%. Like that was already for me life-changing money, and something that I was personally not expecting to happen this strongly, that fast. So seeing this story is truly unbelievable. Also because we are part of this story. It's not like one of those companies where you just throw money at them. Here, I feel involved, obviously, because I'm a creator also, but I truly believe in the story. And
to Karp's credit, he wants us to feel involved. Right? I mean, no one spends as much time as he spent talking about retail investors. Every single time they end off the call with that question, what do you have to say to retail investors? Every time he makes sure to spend 5 minutes actually explaining that he cares about us. And I think they incorporate us into the story.
Have you ever seen a CEO actually happy in an earnings call? Like, well, maybe Musk, but apart from these two guys, earnings calls tend to be just boring. This one is a revolution, even the earnings call per se. So I'm excited, but I'm also very proud to share this journey with the employees, with the management, but also with all of you.
Vince, your raw thoughts off this call.
So first of all, them explaining ontology on the earnings call means in 2025 means that we're still very early with the company. By far the best earnings calls I have been on. Hats off to everyone. I think Dan Ives asked very stupid questions. I don't understand what his point was asking. Are you surprised how fast your customers are ordering? But Mariana asked really good questions. They cleared up that Doge is very bullish for the company. They are investing in engineers. That was very important for me to hear, because we were talking about if they should do buybacks or where they should invest with the money. And I don't mean to be the party pooper here, but I did calculate out the guidance. And in my calculation, they're guiding for about 29% revenue growth next year. Maybe I'm wrong. And the adjusted margin is also like level as they are now. So I think it's a fantastic moment, but we will have some quarters now coming that will be very tough comps to what has been.
Well, especially this Q4 will be hard to beat.
Didn't they spread out the SARS too, guys? Like the 45 million was this quarter, but the SARS impact was 131 million. So based off of that, it looks like they're going to spread it out as kind of what you guys were
No. Total expense was 119. They expensed 115 of that, so there's 4 million to go, and the other 15, 16 was actually taxes related to that. So there's still 4 million to go only.
That, we don't even have to worry about that.
Yeah, and
Okay.
4 million is nothing. It's
nothing.
Yeah.
Amir, your raw take, or Matt, you're gonna go? Your raw take on this one?
Amir can go.
Okay.
Look, I always say that when it comes to investing, I have like this psycho approach, as Arnie likes to call it. No emotions, and that won't change for how I allocate capital in business. But I can't lie, like it's hard not to feel it in my heart when Karp speaks so passionately, emotionally. I mean, that is me he's talking about. That is us. Everyone in the chat, you guys, he's talking about us, like straight to us. He's like tearing up. That was such a special moment. I think we all collectively need to savor this moment because that was something special. I said, like, there is no point to talk about like minuscule details in the numbers. There are some things I like small things I didn't like. We will get to that in due time. But I mean, what an amazing quarter, amazing call. And yeah, if there's one bearish thing, I agree. It was like that knives on his victory stroll, like this most pointless question. Like we have two analysts. He's like out on his victory stroll, can barely hear him. Like, are you guys surprised like that people sign deals with you? I'm like, come on, Dan. You have two chances here. Mariana is sneaky. She got in like, okay, my first question, my second, but she knows that she's only allowed one, so she's always sneaky with those. But yeah, man, truly, really savor this moment because this was truly special. I doubt, like, I would be surprised if I ever have such a quarter where I feel like emotionally attached to what's happening the way I did in this call. Like, this was truly special to me.
Yeah, Dan was obviously utilizing his house phone to schedule Midtown Manhattan dinner at Dorsia. For those of you guys that know what that is, but yeah, I think I want to take a more lighthearted approach. I mean, I know I've been hampering on the fact that the company is stretched in terms of valuation and everything the like, but I want to relay the fact that this company is now hovering with the stock price at about $100, $103 a share, with the 2.5 billion outstanding, hovering around 250 billion a share. Sorry, $250 billion in total market cap. Now, I want to label a bunch of companies that are also labeled around there, and just I want everyone to think about how monumental these companies have been with respect to shaping the American economy. And I want you to now think about how early of stages we are within Palantir's growth story, and tell me that you don't think that this is a $1 trillion company in the making. So for those of the people that are listening, we are now bigger than IBM, Cisco, around the same market capitalization of Merck, Wells Fargo, Chevron, T-Mobile, and we're a little bit smaller than Coca-Cola. But if you think about the American economy and how large those companies have been in business, how long they've been in business, how large they are in terms of their scale worldwide, and how much they've meant to growing the American economy. And now you think about this company, company called Palantir that was established in the early 2000s, less than 25 years ago, and where it is today and where it will be within 10, 20, 30 years. You can't tell me that this won't be a $1 trillion company.
I would tend to agree.
And they're only doing it with 3,900 employees.
They're only
Dude, show me another company that's doing that with 3,900 employees. I don't think there is one.
What are you guys feeling in the chat? I mean, there's a lot of comments here, but I imagine this is, I mean, dude, this is like the amount of money that this is worth to people, especially because people have averages well below $20. I mean, this is more than life-changing. This is, I mean, Arnie, you mentioned it as well. This is different, dude. This is stuff you only get once in a lifetime, you could argue, if you're lucky enough to find it. And it's happening right now.
And look, this story is truly making me like a course, a master's degree that is worth 1,000 times the master degree I actually got in finance, because this is a true path towards excellence in terms of seeing a company from early days to how it evolves and how it thinks. And the struggling thing is you realize that with this kind of companies, it's truly important to look at the financials, the metrics, and so on. But those are important to understand how the machine works. After you understand how the machine works and you are confident that there are signals that the machine can improve going forward, as I think all of us did a very good job when the stock was very destroyed below $10. At that point, I think it was truly important to really dig into the little little details that gave us the confidence. Okay, the narrative is trash. The numbers right now are not excellent, but there are certain things, the things that matter, that are improving. And if we combine that with an evolving story, we can be set for a better future. Now, I think it is truly important to be aware of the risks of the valuation, because it is fair to say that when we reach these levels this fast, there is a valuation risk. But at the same time, we truly see how if the story evolves and evolves much better than analysts expect, than even us expect, then that is the key driving force. So right now we are seeing the effect of the full interest in AI literally converging to Palantir, as we were discussing at Palantir Weekly. So good job also to us.
Vince, go ahead.
No, Dom just has retired midstream.
Yeah, Dom had to leave, guys, so he's out. Probably has to go look at his brokerage and see what's going on there. Yeah, dude, this is kind of crazy, man. This is, I don't know. I mean, there's not many stocks that can create a. The one thing I think I've consistently said over the past couple of years is that the biggest thing we're going to get from Palantir is not the money, it's not the gains, even though that is life changing. It's the relationships, it's the friendships. At the end of the day, you can't take the money with you when you die. You only have the memories, right? And so, I mean, Arnie came to my house last year. You know, this is a guy from Italy. I never thought a guy from Italy would be at my house and
I touched the bricks, guys. You don't.
And they're real, right, Arnie?
They're real.
Yeah, I don't really understand why.
He felt the grit. He felt the grit of the bricks in his hands.
Just for the record, I mean, is that your house or your mom's house?
Okay, it's not my house, but this is my parents' house. But maybe with Palantir gains, I might be buying a new house pretty soon, you know. But no, it's just the fact that Arnie was helping my mom with dinner. I mean, like these are relationships that are going to last forever, you know. And Arnie, I know Arnie and I, when Palantir was $9, we had a Zoom call because me and Arnie were getting a lot of shit, and you know the sentiment was bad. And Arnie, you remember the Zoom call? It was like 2 hours. It was like 2 a.m. into the night. We were just like, just stick to the plan. We know this is going to play out, and eventually, you know, things will change. And thankfully, Palantir executed, and here we are. And so,
and that's why now we are like Karp, yeah, because we literally lived the story. Like we were literally full time into this. Like our margin of error was. We can't have a margin.
We couldn't be wrong. We kind of all of us here kind of risked our reputation on like, all right, let's see if we can get Palantir right. And I think from 6 to 100, I think the story, and the crazy thing is if it's just beginning, I mean, as Matt said, you know, if we're going to $1 trillion, this thing is just getting started. All right. Anyone have any final comments? Amir, Matt, anybody?
No, just for fun. I saw some questions in the comments. Not to put a damper on whatever is happening, but we are currently like $105 per share implies that Palantir will do $123 billion of revenue in 234. It can happen, but that's essentially 45% growth every year until 2034, and that's a 35% margin. Just you know, temper the expectation. Amazing victory day, victory laps for everyone. But as Arnie said, there's basically no risk to the business that I can see, but I see a lot of risk in the stock price. To be like a bit realistic, yeah, it is kind of extended. Amazing quarter. but still, I mean, it is up there for sure.
Arnie, what is your take on the stock price question? Because I think we've been having a conversation over the past couple months, which is that even at 35, all of us were like, all right, $85 billion. Then it got to 50. We're like, all right, 100. And then it got to 70. We're like, so at some point, either the market's going to agree the multiple is ridiculous, or the market is going to go in line with a qualitative assessment of the business, which I think is clearly laid out in this example. If OpenAI is going for 350 and they don't make a profit and they might be commoditized, as Sean was saying when he was talking about Sam Altman, then maybe the thing that is actually growing is profitable and has real use cases. And it's just beginning, in the words of Karp. We're not saying it's just beginning. Karp is saying it's just beginning. That could be worth much, much more. Arnie, how do you think the street's going to resolve the valuation versus the qualitative assessment of Palantir debate?
Look, this connects also with what I was saying before, that the more I study, the more I realize how little I understood into investing into these kind of generational companies. I famously reduced my share back then at around 12. Then I also added again, but I made some mistakes along the way. And the key mistakes were mainly because I was essentially scared that even if I was happy, very convinced on the business, I was very fearful that maybe the short-term results were not as good as the stock was implying. So I realized that with this kind of companies, it's truly, truly important to have the right position size. Now, I'm perfectly happy with how I am right now, because I know I have a position that if there is a very big spike like the one that is happening, I'm very happy. If the stock on the other side got crushed, I would have been perfectly happy as well. So now the question is, what's now on the valuation and how it can be perceived? Personally, what I expect right now is the narrative to just keep compounding. It is true that based on the financial numbers that are here right now, Palantir may look at overpriced. But I think people can easily make the same mistake I essentially did when I trimmed at around $12. And the reason is, yes, the valuation is high based on the current financials. So maybe it makes sense not to be like overexposed. In my case, like I was almost all in. So for me, it was also a way to be financially secure into, okay, I need to save some cash because I need to save my opportunity to keep doing what I'm doing. But I think all the people that now obsess too much with, okay, my DCF tells me it is overpriced, could pay the consequences into not waiting enough the effects of the enormous tailwind. And as I was saying, probably right this now is neither a tailwind, it's literally a tornado that is affecting the company. And now you see a feedback loop between, okay, Palantir is perceived as a great company, as a great operating company, but also as a successful company that now companies are literally trying to replicate. Even OpenAI just opened a position as a forward deployment engineer into civil works. It's like the world is accepting that the way Palantir tried to build a path is actually the right path, and everybody is now converging to that. This means that Palantir is perceived as the leader, and if Palantir is perceived as the leader, they actually have good reasons for being a leader. This triggers further interest from all the potential clients that maybe heard of Palantir back then, maybe 10 years ago, 5 years ago, when the narrative was, this is a controversial company. I don't really want to deal with a controversial company. But guess what? Everybody wants to deal with a successful company. Everybody wants to deal with an influencer when it is rocketing right now. I mean, tell me, how many people now want to interact with you, and how little people wanted to interact with you when Palantir was considered as crap. So when people perceive
by
success...
the way, John just tweeted this, so hope everyone's enjoying that. He's wearing the knitted hat from Scarlett. It was an absolute sweetheart. But
that's amazing.
To your point, Arnie, more people care, and even David Glazer mentioned they're getting more inbound because more people care.
And look, the key difference, like even this is something I underscored, but I think is truly important to underscore it again. Palantir had a moment of peak visibility in 2020, 2021, when it became a meme, okay? But that's not the kind of attention you want. And even more importantly, the company didn't have a way to process, to make that visibility into value. Now, Palantir does have that, because a new customer is interested in literally weeks or just a couple of months. They could be up and running and starting spending big, seeing the results, triggering network effects within that company very, very fast, and creating network effects also with all the other connections Palantir has. So I truly believe that this moment is unique, and the fact that everything screams Palantir is a champion actually makes it a champion, and this helps furthermore the financial results. And that is something that the analysts that are too much into the numbers, like that Brett Hill, all the guys that are still stuck to a $20, $30 per share as a target, don't really digest, because they're financial analysts, and there's a reason why they're financial analysts and not investors.
There you go.
The last thing I want to say, this is not necessarily specific towards Palantir, but just in general, just always a reminder to think about your financial goals and understand, this is a very large update for a lot of people, 20-25% for some people today alone, specifically on a Palantir position. I heard several people talk about how they have millions of dollars within the stock. And once again, congratulations to all of you. But just never lose sight of the objective as to why you're investing, right? Are you doing it specifically for getting to $3-4 million and then you're out of the game? Or are you looking to potentially buy a house to spend more time with your family, etc.? So just what I want is, I think sometimes with this, people sometimes forget about the real reason why we are investing in the first place. And this is an opportunity for you to revisit those goals, and take some retrospective action to say, hell, I've made $500,000, $1 million on this. And we've always talked about going on that trip to X, Y, and Z. Go take that trip, because that's where the real lives are and real memories are made. And that's why we invest in the first place, right? So my goals are different. I don't really have any big wild dreams. My goal is to still chase the 8 figures. So I'm not selling a fucking dime. But at the end of the day, just remember what and why you did what you did by investing in Palantir in the first place, and don't lose sight of that.
I just want to say quick shout out to myself and everyone else. Go follow everyone on X. If you do happen to go to my X, there's a lot of charts up for everyone to see. I was posting throughout. So if you want some visualization, feel free to go there, and also visit everyone's X while you're at it.
Everyone's socials are linked in the description, so everyone can check it out. I'm going to be on for another 20 minutes because I've got a lot of super chats that I've got to read, but everyone else can leave. I'm going to ring the bell for this earnings, but not only for this earnings, we hit a new all-time high after hours at 104. So congratulations to everyone on Palantir earnings. All right, there we go.
This rank.
All right, thanks so much, everyone.
Really tastes well.
Agreed. All right, guys, I'll be on for a little bit. I'll see you guys later.
See you on weekly, guys.
See you guys on weekly. Bye-bye, everybody. Oh boy, what a freaking day. What a freaking day. This was something else. There's a lot of super chats, guys. I don't want to leave without reading them, so I'm going to read them for like the next 20 minutes and then I'll be done. I want to show you guys a funny picture from my sister. She texts me Palantir and I'm like, let's go. And she says, I might cry. But if you take a notice at how she's spelling Palantir, she cannot spell the company, but she might cry. I mean, that's definitely going to get tweeted. That's great. But see, like the fact that someone could cry off of not even knowing how to spell the name of the company, obviously, you know, money can make people emotional, and seeing those types of gains are life-changing. And, you know, that's what she's feeling right now. That's what she's feeling right now. Thankfully, she trusted me enough to run her portfolio, and I trusted Palantir enough to invest a decent amount of her portfolio into the company. So it's pretty special, dude. It's pretty special. I am not going to call Steve because I don't think he's going to pick up right now. I did get a text by Steve in our group chat, and there is a little bit of profanity. That's all I'll say. I'm not going to say exactly what the profanity is, but there is a bit of profanity. That's all I'm going to say. So I'll call him in the morning when he cools down a little bit, and we'll get his thoughts on Palantir tomorrow. But let's just say there are some F-bombs, and they're not the fun F-bombs the way that Karp was throwing them today. They're a little bit more aggressive F-bombs. So there you go. We'll hear from Steve tomorrow morning. All right, super chats. Let's get into all of these. Again, thank you everybody for being here. Magusto, thank you for the $5. I had to stop my surfing vacation to listen to you guys. All the best, even better with this type of earnings. Magusto, thank you for being here, and thank you for sticking with us even while you were on vacation. I've never been surfing before. I got to do it one day. I'm kind of scared of going surfing, but one day. Maybe when I go to California, maybe when I go to SoCal later this year, I'll be able to do some surfing as well. Sarah, thank you for the $20 super chat. Anyone on Robinhood chat would support and request to be taken off the gold card wait list. They took me off the list and are sending an official application. Wow. Okay, that's some nice little insider DD on Hood. So I guess if you're on Hood and you want that credit card, talk to support and maybe they can get you off. I do think they're going to let a lot more people on the card. They even guided that 2025, they're going to let like tens of thousands of people onto the card. So I do think more and more of that card will get rolled out for those that want to get access to it. Vin, thank you for the $20 super chat. Thank you, Amit. Got to your channel because Palantir at $11, and now here we are. And now here we are. I mean, it's just, you know, for the first time in a long time, I'm a bit speechless as well. I mean, I yap for like 7 hours a day, and I mean, if it gets me to be speechless, there's one. I mean, I don't know what to say. Like, and now here we are. Gary Donovan, thank you for the gifted 50 memberships. Appreciate you. Mr. Donovan, thank you for the gifted 50. I think like 200 of you guys got gifted memberships today by people that gave them out. So thank you, Gary. A gifted membership is always cool because it's not just giving money, but it's rather giving money in a way that the community can benefit from in terms of being a member. So thank you, Gary. Really appreciate that and being part of the channel. Rob, thank you, my brother, for the $100 super chat. Booyah, brother. Diamond hands rule 2. Had the Rob and we went to Del Fresco's, I think, in New York. We had some great steak, some great lemon cake for dessert. Thank you, my brother. It's amazing to be on this journey with you. I know you were in Palantir very, very early in that $6 to $10 range, and this has got to feel really good for you. So thank you for being here as well, and thank you for the $100 super chat. Scotty, my boy Scotty, thank you for the $10. I met Scott in Vegas. We got to do it again this year with the meetups. Scott's been in there since a very long time as well. He rode it all the way down, came back up, averaged back in. Thank you, Scott, for the $10. Appreciate you. And thank you for being part of this story. Bryce, thank you for the $10. Thank you for all the research and commentary you have provided over the last couple of years. Have grown the account 750%, mainly thanks to Palantir stock and options. I just sold to buy a house. See, and that's what Matt was talking about as well, right? It's like, I don't think anyone needs to feel bad for taking profits or taking gains. It's like you invest to be able to make money. I know there's an emotional attachment there, but if you can be secure financially by getting rid of half of your position and you can, you know, buy a house and pay off the mortgage, that's the whole point of investing. That's the whole point of this. Obviously, I do think the trajectory of the company is very positive given what we saw in earnings. So I would keep some of a position, but if you're up 10x, I mean, it is not a bad thing to take some off the table, pay off some loans, whatever you need to do, and to use the gains in Palantir, and quite frankly, the ignorance of Wall Street to be one of the ways that you change your life financially, because the only reason Palantir got to $6 or $10 or $20 was because Wall Street was ignorant for the past couple of years. And now Wall Street's having to pay some exuberant premiums because they realize they need to correct their mistake. And the only way to correct it is to buy it back a bit higher. And that's what we're seeing right now for Palantir. Dragos, again, thank you for the gifted 50. I appreciate you, brother. Dragos has been diamond handing this stock for a very long time. Got in, I think, when it was $15, has thousands of shares. So I appreciate you, Dragos. Thank you for being here. Sarah as well, thank you for the gifted 20. Thank you to all the OGs who've been watching for years now and still show up every day and support the channel. Sharon, thank you for the $20 super chat. Appreciate you being here as well. Armand, thanks for the $7 super chat. Thank you, Amit, for shining a light on Palantir. As a university student trying to build wealth, I humbly thank you. I wish I bought more Palantir in the 20s. Those are the comments that also, I mean, get me very, very happy, because the people that are young and getting into investing, it warms my heart, because I guess I was young when I started getting into it at like 22, but there are kids starting at 17. You know, there are kids that are starting very, very, very early. And at 22, I made a ton of mistakes, right? Or 21. At 17, it's going to take a couple of years of mistakes before you think you're even good enough to do this. And I don't even think I'm good enough yet. I think I'm getting better every day, but it takes some time of making mistakes. And thankfully, Palantir has been one of those stocks where it was a mistake, I guess, if you bought it kind of high in 2021, like I did, but it taught you conviction. It taught you due diligence. It taught you how to read a balance sheet. It taught you how to trust in management. And for the university kids that are just getting started, Palantir as your case study into the world of investing is special. It's very, very special, because now when you analyze a company, you're going to be looking for a moat that's as deep as Palantir, and it's not easy to find them. Trust me. I've been trying to go for the past 7 months trying to find the next Palantir, all of it. Like, it's just, it's you don't find the next Palantir. It's very difficult. You don't find the next Tesla. It's very difficult. And when you find it, you hold on for dear life and believe in the vision that they are working towards. Damien, thank you for the gift of 10 memberships. Appreciate you for that. Thank you for giving out 10 memberships. Michael Greenberg, thank you for becoming a channel member as well. Appreciate you. I'm Beneficial. Thank you for the $5 super chat. Not going to lie, I was very doubtful from the sidelines, but wow, fantastic results, and the market's rewarded shareholders yet again. Congrats all. Yeah, and look, we're going to see how the market deals with this premium that Palantir is getting. Right now, it's worth $103. The market cap is well over 200 billion, I think at 225. Obviously, conventional analysts are not going to be able to understand the market cap on this, but do they understand the market cap on Tesla at 1.5 trillion? No. But nonetheless, Tesla is there. And so I don't want to make a sort of lazy argument that Palantir is like Tesla, but rather every single day on this show since 35, when I started saying the stock was expensive, I've been having to find qualitative assessments to be able to understand what the value is in continuing to buy even at these levels. And there have been more qualitative arguments that the street has latched onto over quantitative. Now, maybe that changes in the future. Maybe if we get a recession, that obviously changes, because high multiples get compressed in a recession. But if we're in a bull market and Trump's being able to stop these tariff wars from taking place, and Palantir is able to be the company that is software enterprise AI solutions that the street is ready to back because they want exposure to AI outside of NVIDIA and the hardware and the semiconductor sector, then it just might continue to get the premium. And I know people hate to hear that, but that is the answer. Like, why has it continued to get the premium since it was $35 when most people felt it shouldn't have been over $25? Because the street believed in it. And if they can put up the growth, which I agree with Codestrap, I think, they're guiding for 30%. What if we get 35? What if we get 40%? What if this really does become NVIDIA level type of growth? It's going to be very special. It's going to be very, very special over the long term. And I think that's why the stock is reflecting that. Monty, thank you for the $184.99. Amit, I started following you when Palantir was 7.5, and today we are here. You are a superstar, and your passion is inspiring. Keep going strong, and congrats to all of us. Congrats to all of us, and to you, Monty. I think the big thing here is I'm happy the passion is inspiring, but the passion can't be inspiring unless there's an audience to speak to. It's like I don't want to get emotional about it, but there is no me without any of you guys, right? There is no ability to be excited and passionate if there's not anyone that cares about the content. And so I'm unbelievably just grateful for Palantir for providing me something to speak about that could get people to be galvanized around a topic. In this case, it happened to be a stock and a company. And now we've built the brand to a much higher level, and it's just very exciting to be on this journey. And it's really exciting to be on this journey with everyone else, because this is not the New York Knicks winning a championship. That's cool, but this is, Palantir crossing 100. You could retire type of, the Knicks winning a championship, the Lakers winning a championship. It's cool. Sports is cool, but when you're on a journey around something financially related and people get to make money off of it, it's a different level of excitement that I think everyone has, and so it's amazing. It's very, very amazing to be on this journey. Sima, thank you for the $5. Thank you from Switzerland. Made a lot of money from my family. Thanks to you. Thank you for being here as well, and being part of the show and taking a chance on Palantir. Dean Masters, thank you for the 100 Canadian dollars. Amit, please don't stop doing your show, or I will feel like my left nut will be cut off. Congrats, man. Great show. I listen every day. Palantir OG here in before the DPO. got to clap it up for that one. We got to clap it up for that one. Dean, I appreciate you. If you've been in here before the DPO, that means you got shares on the private markets before they even priced them at $9 at DPO. So thank you for being here, brother. I will. I can guarantee I will not stop doing the show. That's for sure. The show will be here every day, and yeah, and then as long as people continue to enjoy the content, I'll be here creating the content every single day. That was a great comment. That was a good one. That was a good one. Okay, we've got Evan, Stock Market News. Thank you for becoming a channel member. Appreciate you, bro. Venkint, thank you for becoming a channel member as well. Kevin Campbell, thank you for the $100 super chat. Cheers, Amit. As a business owner evaluating Palantir for business cases, I'm extremely bullish based on the value of Foundry that can provide to folks like us. Thank you again for your coverage. Well, first of all, thank you for the super chat. The other really cool thing, Kevin, about this comment is that I think for the first time ever, really for the first time ever, Karp got to explain what the ontology is. And that was because of a question that someone asked. By the way, Palantir right here, 104.34. We touched right now. We're at 103.71 after hours. There hasn't been an earnings call where they actually explained the ontology step by step. And they've done it in the past, but this question was so specific. I'm so happy they picked this question. And they probably picked this question because of all this DeepSeek stuff that happened. And you were able to really articulate the ontology thesis now that people actually care about commoditized platforms that inevitably need some type of ontological layer in order for it to make sense. And they crushed it. They crushed that explanation. I mean, they just crushed it. So the fact that they were able to crush that explanation, I think, is going to get the street at least more excited to listen to what the hell Palantir is talking about when it comes to this concept of the ontology. We've already seen multiple upgrades across Wall Street, Morningstar, Morgan Stanley, Bank of America, et cetera, basically saying we think ontology is the sweet spot. Palantir spent 20 years and thousands of patents developing it. It's not easy to replicate, as Karp was mentioning. And because of that, that is a moat that is undeniable, even if the valuation's up there. Even UBS, when they put out that $80 price target, they clearly stated, look, we get it's expensive. And at $100, it's gotten even more expensive. But nonetheless, we think Palantir deserves a material software premium to their peers because Palantir has something that's different. And they actually interviewed about 20 different customers to be able to come to that conclusion. It wasn't just an analyst being an analyst. And so I think more and more people are starting to believe that the ontology actually does matter. Video super fast. Thank you for the $23.89 super chat. Yo, Amit, you got me to go all in on Palantir, even though I invested when I didn't know your channel. And thanks to Arnie, through which I discovered you, today's earnings made my mood. It's a special thing with Arnie, dude. It's a special thing with Arnie. Arnie and I kind of went full time when it came to Palantir content creation. And so we both kind of felt the same struggles. He was doing it more through his articles. I was doing it more through YouTube. But I think there was a day, I was referencing this a little bit before the show ended, which is that I think the stock was at like $9 and we both just felt kind of down. It was a Friday night after Palantir Weekly. We stayed on for like another 2 hours. It was like 5 a.m. his time, 1 a.m. my time. And we're just like, are we wrong or is everyone else stupid? Like, do we actually get Palantir wrong? Like, is like, do we just fully not get it? Or is the market just dumb and like, eventually we'll get it? And we concluded with like, no, the market's just fucking stupid, bro. The market's just dumb, and like eventually the market's gonna figure this out. And the game plan there was, look, we've kind of risked our reputation from a brand perspective on Palantir, and if you're in the stock market content creation game, but not even the content creation game, just if you're trying to be someone who wants an opinion that's respected in finance, it's all based on your calls. That's it, right? Kathy Wood made her name because of Tesla. Obviously, she had some bad calls after that, but nonetheless, right? Because of Tesla. Ross Gerber, even though he has a unique relationship with Tesla right now, the reason he's managing $2 billion is because he was early to Tesla. He was able to raise that money because he got that call right. Peter Lynch, David Tepper. I mean, you go on and on of all these guys. Warren Buffett made his name on Coca-Cola and American Express, and then obviously Apple with big tech. I mean, people make their name in this industry by your ability to sift through the noise, find the signal, find the alpha, and then make a concentrated bet against it. And it's really hard to do. Like, it's just not easy. Especially it's not easy if you're only 22, 23, Arnie, like 26, 27, and you've barely had any experience as like a real investor full time. But I think the fact that it happened on Palantir is so special because the 50-year-old guy who's been working at a hedge fund was never going to get Palantir, right? That was never going to happen. It was always going to be some random kid who started watching Karp interviews and was like, this guy's hair reminds me of my hair. Both of our hairs are kind of crazy. I want to listen to what he's saying. It was always going to be Arnie from Italy being like, I already worked as a financial advisor. I hate financial advisors. His history is working as an investment banking analyst, and he hated it. And so Palantir was the antithesis of those companies that you analyze in the investment banks. And that's what attracted him to Palantir. It was just different. For me, it was Karp's philosophy that got me into the name. And so it was always going to be something different to find a unicorn. And the unicorn has been found. The street has decided to reward the unicorn, up 24% today. And a lot of people have made a lot of life-changing money in the process of finding this unicorn. And here we are today. Here we are today. Matson, thank you for the 35 super chat. If Tesla pushed 200 up after its earnings call with the momentum from elections, you should see Palantir going up $100 from here. At least 180 makes sense. The future's calling. Bull run. Look, I have no idea what's going to happen to the stock. I've kind of stopped trying to predict exactly what would happen to it, which is why I don't know. Even before today, I was like, I just don't know what happens to the stock. I know there's a bunch of storylines, and I know there's a bunch of headlines that could take it down, and other headlines that could take it up. And the headlines ended up taking it up more than taking it down. I do acknowledge the valuation's up there, right? $225 billion is a pretty expensive valuation, but then again, we also come to all the other arguments for why $225 billion could be justified. But it's nuanced, right? This is why investing in tech stocks are hard, because Nvidia, Amazon, Tesla, all these companies were overvalued for so long, but if you stuck with them, you won, because quality of leadership, quality of employees, quality of technology moat sometimes outweighs all the other stuff that conventionally should matter. And with Palantir, it might be the same, which doesn't mean there won't be volatility. All those stocks I just mentioned had 70, 80% drawdowns. And we've been pretty blessed as a community to not experience that since 2022. But nonetheless, I think everyone is prepared to experience that. And we have so much conviction in the company that we would be okay if that happened. A, because we get to buy the dip. B, because we know it's the process of being part of a revolutionary company. I mean, Palantir, for the first 20 years before they went public, it wasn't all up and to the right. It was a lot of volatility to get to this moment. It's just the benefit of being a shareholder is they went through all that shit for us to be able to invest when they're really going up and to the right. And that doesn't mean there can't be some dips along the way, but it does mean that the story is just becoming identified by the rest of the world. I mean, dude, Palantir still is not a household name. It's not a household name. It's not a household name like Tesla, Nvidia, Amazon. I mean, most people in the world don't know what a Palantir is. But if you say Amazon, they know about it. If you say Nvidia, they've heard about it with the gaming and all this stuff. They've heard about it. If you say Tesla, obviously they heard. You say Apple, they've heard. Palantir they have so much brand recognition left for them to grow. And the fun thing about this whole journey is the reason Palantir has been able to get the majority of its brand recognition is because of independent media. Arnie Substacks, Amir valuation videos, Matt Seeking Alpha articles. Like, this is what for the past 3 years has created the ability for people to care about Palantir. And now CNBC, Bloomberg, Wall Street Journal are excited about the name. But 3 years ago, they weren't. And so it's been such an organic journey. It's one of those things you just can't replicate. And I don't think it's ever going to be replicatable the way this journey has played out. And so now it's just a question of how big can they be? How big can they actually be? Okay, I think I got through all the super chats. I'm sorry if I missed any. Bsofts, thank you for the $5. He said, "Rip, Steve covered calls." Well, we'll talk to Steve tomorrow. I'm sure he'll have some interesting words to say. So we'll talk to him then. Ty Gordon, thank you for the $5 super chat. Congrats to over 11,000 viewers watching the live stream. Not bad at all. You know, on Nvidia's, we had 19,000, and that makes sense because it's Nvidia, right? Like, again, Nvidia has way more brand recognition than Palantir. But the fact that we got half of that for Palantir, I know this is a Palantir channel, but still, you know, the algorithm on YouTube is probably showing it to new people, not just like the same 11,000. That says more about Palantir's brand recognition than it says about my channel. It means that more and more people who have never seen my channel before probably saw the thumbnail and they clicked on it because they wanted to know what was going on with Palantir. And as a result, you got a lot more people that are interested. You got a lot more people that might buy the stock. You got a lot more people that might look into the company. I mean, this is just, it is the compounding media effect that only takes place if you have the growth and the numbers to back up that compounding media. And we're seeing it happen right now. And it's just really exciting. It's just really, really, really well. Jim Cramer also tweets about Palantir 10 times a day now. So that's another reason why people are probably getting more interested in the stock. Did Jim Cramer tweet after the bell? Did he say anything on Palantir? Did he sell? He said sold for $100. Well done, Palantir buyers. Oh, he's acting like an auctioneer. Look at this. I predicted 100 on Palantir. I promise I won't let you down. Do I have 99.5? I sold for 100. Well done, Palantir buyers. Kramer is Kramer. Kramer is indeed Kramer. He did say nothing can stop Palantir a couple days ago. And I guess on this one, he was right. Nothing can indeed stop Palantir. Matan, thank you for the $69 super chat. What this company does with the context immersion and permission enforcement with LLMs is worth twice the current price. You need to understand technology and use it daily, hourly to see it. AI is here, get on it. Well, that's what Codestrap was saying as well, right? Codestrap was basically saying the non-technologists don't understand the value of their technology. They're only concerned about the multiples, which I'm not dismissing. Multiples and valuation, all that stuff deeply matters. But when you've got a unicorn company, it makes sense to look a little bit more into the tech. And a lot of the analysts don't care about the tech. Because, dude, a lot of the analysts analyze Snowflake and Datadog and these software companies that are great companies, but they're not transformational companies like a Palantir is. And they've never had the experience of, like, honestly, just like the auto analysts have never had an experience analyzing a company like Tesla, where the product is so good that they don't need to spend hundreds of millions of dollars on advertising on TV networks to sell their product, because once you experience FSD, you're like, oh my God, this is the future. This is AI, this is robotics. This is happening right now. A lot of these software analysts have never actually analyzed the company that doesn't need to sell you via Karp's infamous steak dinner or PowerPoints in order for their software to sell itself. Meaning, as Karp's even said on the call, he didn't need to take people out to steak dinners, or he was saying the reason why they were rejected for 10 years is because he never chose to engage in the inauthenticity of taking you out to a steak dinner and making you feel like you're better than who you are and laughing at your jokes that are not funny just to get you to buy their software. It was always, okay, you don't want to buy the software, screw you. We'll find someone who eventually does want to buy it. And when you've got that type of mentality ingrained in the culture of the company, and you stay towards that mentality for 20 years, it's very, 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 very difficult to be inauthentic. And at some point, 36% year-over-year growth, I mean, the numbers are coming in, folks. That when I saw 36%, I was like, okay, this is different. This is different. And the guide for 30% is absolutely a sandbag, in my opinion. I think they're going to try to get to 35% by the end of the year. But 36% growth, I mean, there's not a lot of software companies compounding at 36%. That's not. Now, you could say it's priced in. Sure, it's priced in. Like, the next 50 years of Palantir's growth are priced in. But that doesn't matter. What matters is how the broader market is interpreting their ability to capitalize on that growth, where the TAM is growing, and ultimately, if they are differentiated from all the other software companies that can't even grow to 25%. And if they are, the street will pay a premium. And maybe that premium is excessive right now. That could be true. But nonetheless, the street will pay a premium. And for the Palantir bears that have been saying this thing has to come back to $30 for it to make logical sense, there's just a different way to analyze this company. There's just a different way to analyze this company. Banu, thank you for the $10 super chat. You inspired many, including me, to stay on the Palantir army. Congrats, everyone. Congrats to you. And congrats for continuing to be part of the army and holding on. I mean, dude, even holding on has been a challenge, right? I'm sure a lot of people, like, just holding on to the stock, especially if you're up a lot of money, is tough. It's not easy. But nonetheless, I do think that if you are up a lot and you've really got to pay off some debt or something, it's not a bad thing to take some profits here. But just being on the journey, even if you've trimmed your position, but you've mentally kept up with Palantir, meaning you've kept up with the videos, the news, the articles, they've been in the back of your mind. Even if you spend 30 minutes a week just like learning about what happened for the week on Palantir, like that in and of itself is still being part of the story and the journey. And I think there's a part of everyone that even if they have 10,000 shares and they sell 5,000 of it, and they don't really care about the other 5,000 shares, right? That's just there forever. They're never going to look at it. They're going to, in 20 years, they'll look and they'll sell. The fact that they want to keep up with the content, I think, is the most exciting thing. And I noticed that a year ago, as I started getting more consistent on YouTube, that the fact that people want Palantir updates every day, it means that it's not even about the money anymore, dude. Because it's like if you got a long position, you've got a long position. You're probably not touching it. You've probably got your price targets, and that the fact that you just want to know what the hell is going on in the company, you care that deeply to stay up till 1 a.m. on a Saturday to listen to a Palantir podcast. I mean, it's a different level of commitment that people have towards the brand of Palantir even more so than the stock. And that's very exciting to be part of. The P is not for Palantir on this necklace, but I might as well say it's a gold necklace. My Indian name, I have you have a MIT, which is an Indian name, but I have a house name that is Indian as well. And it starts with a P. So my grandmother gave me this like years ago, and I just started wearing it. But let's just say it stands for Palantir as well. It stands for Palantir as well. Well, I mean, I guess that's it. This is it's crazy, dude. It was destiny. Yeah, it was. My Indian name was always meant to start with a P, because it's all, my Indian name was always meant to start with a P, and I was always meant to fall in love with a company that also starts with a P, aka Palantir. You want to know what else is funny? My initials are the initials of Mr. Alex Karp, AK. So it's kind of just I don't know. Sometimes the universe, fate, whatever you want to call it, it comes together. Obviously, I've been blessed to meet Alex Karp last year, and I hope everyone one day gets a chance to meet him. I'm sure he'll probably be at events, and he's on a book tour. So and in New York, he's actually doing a book tour next week. So if you're in New York, you can buy tickets. If you just type in Alex Karp book New York speech, you'll find it on Google, and you'll actually be able to see him live. But I think his brand is becoming a different type of persona. I think the Elon level of attention is going on to him. And if he can take this company to $1 trillion, then it's going to be an even different level of brand identity. And from the experiences I've had of meeting him, he is exactly the same way he is on the call. I mean, like, dude, when he said we're powerful as fuck, he believes in that. Every other CEO would be afraid to say the F word, right? Like, he's not, because he's like, what's the worst that's going to happen? Some analysts will think it's unprofessional. Okay. Right? Elon saying we could be worth more than the 5 largest companies combined. Every other CEO would go crazy. Their lawyers would go crazy if they said that. But Elon's like, fuck you. I believe we could be larger than the next 5 largest companies combined. And if I feel like saying that, I'm going to say it. Let the SEC say whatever the hell they want to say. I believe that can happen, and I want to tell my shareholders that's possible. And so when you've got people that are unapologetic and believe in what they say, essentially have some backbone, it can inspire the masses. And inspiring the masses is a very special thing. Yeah, PAF is definitely going to become a new thing, guys. PAF. Palantir as fuck. It is definitely going to become a thing. PAF. Absolutely. This is becoming a thing. I got a clip when he says it's powerful as fuck, and make that a soundboard. Make that a sound on the soundboard. We have to do that. And every time we get some good news about Palantir, I'm just going to press that. It's powerful as fuck. And then he banged on the table too. It was just great. It was a great moment. Absolutely great moment. Oh boy. Oh boy. Oh boy. Oh boy. It's wild, man. It's just wild. Where's the stock? Are we still holding 100? Well, do you guys think we give up 100 tomorrow, or you think we go higher? I think we go higher, bro. I think we hold 100. I think we hold 100. I think this puppy is going higher. I think we are holding 100 after a quarter like that. And I did say this last night on the Future Show. I said, if Karp comes out with good numbers, it doesn't matter what, the multiples are going to look like. This thing's going higher because people are going to be excited to be part of this story. Now, can we see below 100, in the next couple of weeks of volatility? Of course, we can see it tomorrow. But the point is, I think subjectively, this thing holds 100. I don't think it as easily gaps down. I mean, you would have to have a lot of sellers in the morning, and maybe that's the case. At $100, you probably got some people that definitely want to sell. I wouldn't doubt that. But I think there's a shot. It could hold 100. Dense Sorbet, thank you for the $10 super chat. Just woke up and got a shock. You absolutely deserve this. Thank you so much. Thank you for being here, Dense. Appreciate you. And hopefully you get to enjoy running through these numbers, because they were some pretty exciting numbers that we got today. Imagine just waking up right now and seeing Palantir at 100. Dude, if I woke up and I somehow slept through earnings or something, and I just look at my phone and we're at 100, I would just be like, oh, guess we had some good numbers. Also, we're also up because of Canada and Trump I'll talk more. I don't want to talk about it today, but I'll talk more about it in the morning. But Trump announced some deal. There's like a fentanyl czar that Canada is appointing or something. The point is they're delaying the tariffs by another 30 days, which in my opinion means that tariffs are going to be delayed indefinitely because they'll come up with a deal in another 30 days. So everything's up after hours. Google, Robinhood, baby, 53.19. That's up. Grab is up 2.2%. S&P is up 0.5%. SMCI announced their earnings are going to be on February 11th. That's why they're up 8%. Tesla is up 1.6. Meta's up. Bitcoin back to 101. It was at 91 last night. Nice $10,000 swing. HIMS is up 2%. Palantir obviously up 24%. Amazon's up 0.5%. And NVIDIA is up 2%. I did buy more NVIDIA today. Now I have 475 shares. So I have 25 shares left to complete my 500 share goal. Average is at 125. But you got NVIDIA right here at 118 and Palantir at 103.8, up 24%. Oh, man. I don't even know what to say. I don't know what to say. I don't know. This is... Palantir also reported on August 5th. Correct. They did report on August 5th, which was a wild day, and they reported today on a wild day because of tariffs, which ended up literally being a nothing burger at this point. This is what Palantir does. They take the worst data report, and then they come in with some big daddy numbers, and everyone's like, oh yeah, it's Palantir. It's freaking Palantir. Dave, thank you for the $50 super chat. Amit, congrats and thank you so much, brother. Can't tell you how much I appreciate all your amazing content. Great work. Celebrate and enjoy the big win today. Dave, thank you for being here. Thank you for the $50. And thank you for being part of the show. That's all I can say. Thank you for being part of the show and being here and enjoying the content. You know, again, as a content creator, dude, it's very humbling. I think I've said this many times, but as a creator, you are only creating for an audience, right? Whether you're a musician, a YouTuber, or an actor, whatever it may be, like you're creating for the audience. The audience is who you serve. And if your audience is not getting value, then what are you creating for, right? So it takes a lot of time to figure out what is value. Is it entertainment? Is it information? Is it humor? I don't have to worry about the humor part. I mean, that's stuff I had since I was born. But outside of that, it's really a question of like, how can you get people engaged and watch your stuff or listen to your music over listen to Justin Bieber's music or watch Netflix, right? Because at the end of the day, what am I doing? I'm competing with all other forms of attention that you could be consuming right now. And I think the biggest way I figured that out, and it wasn't really a formula or anything strategic, it was just like, well, what if I have energy? What if I'm excited to be here? What if every morning when we wake up, you know, your morning coffee is a dose of emit energy versus actually needing to need coffee? What if that could be the differentiator? And it wasn't that hard of a differentiator, just like Palantir says, well, what if we can make software that actually works? Is that hard of a differentiation? No, because the whole market is building shitty software. So let's just focus on building software that works. What if you could just focus on providing value and having energy and actually caring about your audience? Could that work? And so far it's worked. And hopefully it continues to work and we can keep building this to be bigger than what I ever imagined. I mean, you know, the other reason it makes me emotional is because like I'm on a journey with Palantir, right? This channel wouldn't exist without Palantir, and the ability to actually engage with the company and meet Karp last year. It's kind of like I'm growing with them, right? I'm growing the Emit brand, whatever that may be in the future, and Palantir is growing a $200 billion business, and it's just very special because this whole community is here to be part of that journey, and I don't know. It's just like, what do you say? What do you say other than you're grateful for it? You're really, really grateful for it. I'm sure Karp is very grateful for the investors, and he expresses that every single time they get a chance. 103.80 on Palantir. We just hit 104 again for a second. But there's nothing you can say other than being grateful. Like life is about the journey. It's about the memories. It's about the ability to express gratitude when you know that the only reason you're in this position is because of other people. And I think your execution ultimately leads to just being more and more grateful and hoping that this thing can get as big as it can possibly become, because you got one life. You got one freaking life to try to make something special. Intelligent Computing, thank you for the $10 super chat. Your enthusiasm makes a huge difference, AK. Hopefully it does. Hopefully the enthusiasm continues to make a difference. And the other thing about it is it's not manufactured. It's not fabricated. Like I don't get excited to be excited for the sake of the show. I get excited because I love covering the markets. To me, every day the market open and the market close is a debate argument. And I did debate in high school, and I was relatively successful in high school. And I never thought I would do debate again. I didn't do debate in college because I wanted to have more of a social life. I kind of gave up my social life in high school. And so every single day I get to have a debate, theoretically, because you're presenting arguments that are happening in real time, like these tariffs, and you're trying to figure out what are the implications of these arguments, and then can you present them, can you communicate them in a way that is valuable to people, either from an entertainment perspective, obviously the humor, again, got that down packed, don't need to worry about that, but also from a, like, hey, can you actually break down these concepts so I feel a little smarter at the end of the stream because I actually understand what's going on in the world. And, that's what I pride the stream on. I know a lot of you guys are probably making jokes about the humor, but you can keep making your jokes all you want. You can keep making your jokes all you want. It's okay. The humor is locked in, down packed. A says, I'm often really lethargic, so I genuinely appreciate the energy you put into the show every day. Thanks, Amit. Thank you for being here, and hopefully it continues to get you excited every morning as well. All right, do we end it? Do we end the stream? What a quarter, dude. What a freaking quarter. This is different, bro. This is different. I think the telltale was the freaking was the Karp interview on CNBC, dude. That was the telltale. His energy, his excitement right there. That was the telltale that this quarter was going to be different. 36% growth. Goodness freaking gracious, dude. Goodness gracious. Drago says, hope my wife understands when I hug Amit like I would hug her. I can't wait to meet you, Dragos, eventually. Chicago. For those that are coming to the Bay Area meetup, let me put the form in the chat right now. I got to do a New York City meetup a couple of weeks ago, and it went better than I could have imagined. I mean, you speak about something special. That was special. Just seeing everybody in person was very special. And after this quarter, I imagine the California meetup will also be very special. So I'm going to put this in the chat. Just all you need to do is sign up with your email and name, and you'll get an email probably in like maybe a day, maybe even tonight, probably tomorrow, with more details on the meetup. So if you want to sign up, if you're in Palo Alto next week, meetup's probably going to be on Thursday, February 13th, downtown Palo Alto. You'll get more details later, but you can sign up for the details there. We do have Robinhood Weekly tonight, 9:30. I'll be back, Robinhood Weekly. So 9:30 with Tanner and Roy. We'll have a lot to talk about on Hood Weekly. And then we'll have Palantir Weekly on Friday, diving deep into the numbers. I haven't even looked at all the numbers, dude. I barely looked at the freaking presentation. I'm seeing a ton of numbers that look amazing. And I will spend a decent amount of time today and tomorrow trying to understand. But every number I'm looking at is like 35% growth, 45% growth, 65% growth, 73% growth, 45% operating margins. I mean, these are big boy numbers. They really reaccelerated. Look at this one chart right here. They reaccelerated U.S. commercial growth quarter over quarter from 9% to freaking 19%. Not year over year, quarter over quarter. Like they have over 700 customers now. And this party is just getting started. They're going to have thousands of customers one day. And I think that's why Karp is so excited as well about the long-term trajectory of the business. So I don't know, man. It's going to be really, really exciting to see how this ends up playing out, especially over the long term. Okay, I think that's it. I think we end it. Congratulations to everybody. This was one of the most fantastic earnings ever. Everyone in this chat deserves their gains. Don't let anyone tell you any other way. You'll see a lot of headlines tomorrow, a lot of bears, maybe some analyst reports that have been bearish saying, hey, Palantir can't justify the valuation, yada, yada, yada. I get it. And that's not something to dismiss in terms of the actual quantitative analysis they're giving. But it's also something to remember. There's a reason they don't get it. And maybe the numbers are a legit reason. But so far, for the past 2 years, the numbers have not been a legit reason to not get Palantir, even if it sounds like a legit reason. So for everyone that's up on their position right now, you deserve it. You deserve it. The employees deserve it. The insiders deserve it. The investors deserve it. Everyone who believed in this mission deserves it. And quite frankly, you deserve it because retail did not add 20% to Palantir. Let me tell you how much market cap that is. That is $37 billion. You think retail pumped $37 billion into Palantir over the past 2 hours? I don't think so. Maybe they pumped 10 out of that 37 billion. But the point is there's a lot of people with bigger money that maybe classify as retail, but they're not managing a couple 100,000. They're managing a couple 100 million that decided after hours, these numbers were so good, they're buying more. And so, at the end of the day, as much as the bears like to say this is retail driven hype and mania, this is not GameStop. This is not AMC. It is quite frankly disrespectful to say this is a retail driven stock when you see this type of growth, because GameStop doesn't even have an earnings call, right? Like, it's just, people will throw out any argument they can make to disrespect what is happening. The same thing they do with Tesla, but it's happening. As Karp said, it's happening. And because it's happening, it's one of those things that's very exciting to see. That doesn't mean there's not going to be volatility in the midst of it happening. But the point is, for today, it is freaking happening. And the more and more that people latch onto the story, it can continue to keep happening over the long term. All right, that's it for me. I'll be back with Hood weekly at 9:30. Thank you, everybody, for being part of this channel, for being part of this community. It means the absolute world to me. Again, I cannot express my gratitude. I get to wake up every morning and sit in front of my real bricks and get to speak to now what's becoming thousands and thousands of people every day on my thoughts on the markets, Palantir, macro, and it is a dream. What do I say? It's a dream. It is literally a dream to be here in this position right now. And the one thing I take pride in is that I think I'm executing on this dream in the right way. The way it's supposed to be done. The way that's not trying to suck up as much money out of you guys or sell you a course, or like it's doing it the organic right way. And quite frankly, I've learned that from Palantir. That's spent 20 years doing it the right way, and they're getting very rewarded for sticking to that thesis. And when you're authentic, when you're organic, usually you find a way to have some success. And it's been a blessing every day, and being able to do this, I'm just very grateful. I'm very, 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 very grateful to be doing this every single day. And I'm happy everyone's getting value from it. And I'm happy everyone's getting a little fucking rich, baby. Palantir Q4 earnings. We are done for the day. Thank you, everybody, for being here. And what a journey it has been. Good night, everybody. I'll see you guys on the market open tomorrow. Bye, everyone.